Hi, thank you for joining us. I'm Jimmy Connor and I'm with Bloor Street Capital, which is a corporate access firm based in Toronto. Today we're holding our first ever silver conference and I want to thank you for joining us. We have a great lineup of speakers, beginning with Mike DiRienzo. Mike is the executive director of the Silver Institute, and the Silver Institute is the marketing arm of the silver industry. They provide some amazing research. Mike's going to take more of a top-down approach. He's going to look at the supply side, the demand side, and tell us where he thinks or where they think silver is going in 2021. Then we're going to hear from Maria Smirnova. Maria is the senior portfolio manager at Sprott Inc. And Sprott Inc. is one of the world's largest asset managers, which is focused exclusively on precious metals. Maria is going to take more of a bottoms-up approach where she's going to look at specific companies and how she values silver companies and what valuation criteria she uses to make investments. Then we're going to hear from Randy Smallwood. Randy is the CEO of Wheaton Precious Metals, and Wheaton Precious Metals is one of the world's largest royalty companies, and 40% of their production or revenues come from silver, and some of their partners include some of the world's largest silver mines. So Randy's going to give us great insights into what he's seeing in the silver sector. Then we're going to hear from Stephen Orr. Steve is the CEO of Gatos Silver, and Gatos Silver is one of Mexico's newest silver producers. Last year they produced just over 4 million ounces of silver, and this year they're on track to produce over 7 million ounces. They also have a very aggressive drilling campaign underway with 3 rigs, and they're going to increase that. Then we're going to hear from Brad Cooke. Brad is the CEO of Endeavour Silver, another Mexican producer. Endeavour has 3 high-grade underground mines. Last year they produced 3.5 million ounces of silver. This year in 2021 they're showing guidance of 3.6 million to 4.3 million ounces of silver. Then we're going to hear from Taj Singh. Taj is the CEO of Discovery Silver, and Discovery Silver is another exploration developing company in Mexico. They currently have one of the largest undeveloped silver projects in the world with over 600 million ounces. They also have a very aggressive drilling campaign underway with 3 rigs working. Then we're going to hear from Greg Johnson. Greg is the CEO of Metallic Minerals, and Metallic Minerals is a silver exploration company focused on the silver-rich Keno Hill district in the Yukon. Last year in 2020, Metallic Minerals entered into one of their most aggressive drilling campaigns in the company's history, and they're going to follow that up with another aggressive drilling campaign this year in 2021, and that's going to start within the next couple of months. If you have any questions for any of the presenting companies, or if you would like research on any of the companies, please send us an email to info@bloorstreetcapital.com. That's info@bloorstreetcapital.com. If you don't get a chance to watch this conference in its entirety, please check it out on our YouTube channel, Bloor Street Capital. Make sure you subscribe, hit the notification button to stay up to date. And once again, I want to thank you for your support. I hope you enjoy the conference. Hi, Mike. Thank you very much for joining us today.
Well, thank you, James. We really appreciate the opportunity on behalf of me and all of our members of the Silver Institute. Thank you.
I'm looking forward to this discussion. So a lot of our viewers might not be familiar with the Silver Institute. So why don't we just start with a brief overview of the Silver Institute and tell us what your mandate is.
Sure. So we are actually celebrating our 50th anniversary this year, and it began in 1971. It was started as more of a technical clearinghouse for information on silver. It has evolved over the years into a market development organization. We have really primary missions, which consist of creating programs that will hopefully chew up more demand at the end of the day for silver. We do that in a number of ways. So we're involved in, for example, jewelry promotion. We're involved in areas such as China, a very important market to the silver industry on a global basis. We're just starting to work with another important country, which is India. And we also put on programs that are involved at some of the artisanal levels in Peru and Mexico for their small mining jewelry manufacturing operations. They're huge mining countries, as you know. Mexico is #1, Peru is 2. We'd like to see them consume more silver jewelry. And we put out reports on the market on a rather consistent basis. So we have a bi-monthly silver news. We do press releases throughout the year. We just last week released our World Silver Survey, which many consider to be the Bible of the industry. And we also do market trend reports. We've done one earlier in the year on silver and automotives. Last year we did one on solar power. We also did one on silver's growing role in 5G technologies. And soon we'll be putting another one out on silver in flexible and printed electronics. And we have a couple more going throughout the year. So it's accurate information on the market that's reliable for all people interested in the silver market, as well as creating programs to hopefully at the end of the day create more demand and awareness for silver.
And how many members do you have within the Silver Institute?
We have about 30 members. We have most of the major primary silver mining companies. We have refiners. We have end users of silver products. We have banks, dealers, and so forth that are involved in the silver industry. We welcome anybody who's got a tie to the silver industry in one capacity or another. We have a board of directors and we have an executive committee, which is essentially comprised of those folks, the CEOs on the mining companies and at the refining level.
So Mike, you mentioned that one of the key reports that you put out every year is the World Silver Survey. So I want to refer to that a lot in this discussion because it's got a wealth of information in there. But I was looking through it, and one of the things I was really surprised at, there's a list in there of the top producing silver countries in the world. And number one, of course, was Mexico. They produce 187 million ounces annually. Then next up was Peru at 135 million ounces. Then came China at 110 million ounces, and then it drops off quite significantly after that. Chile was number 4 at 38 million ounces. But I was really surprised at how significant China was. I never thought they were a major silver producer.
Yeah, you know what, James, you're not alone. A lot of people are surprised to see that China is a top 3 silver producer. And it's interesting for several reasons. One is that they really weren't even on the map 10, 12 years ago with respect to silver production or silver mining activities. But 20 years ago, they opened up their gold and silver markets where individuals could purchase gold and silver. They opened up their markets to allow for entities like the Shanghai Gold Association, the Shanghai Futures Exchange. So they're trading gold and silver on a daily basis in that country. And when they opened up those markets, the Silver Institute took that opportunity to forge strong relationships with the Chinese silver market players. So for over 20 years, we've been on the ground in China with respect to biannual visits. We always have a China International Silver Conference, which has grown over the years to approximately 500, 550, 600 people at times. It's held in different provinces throughout each year, and it rotates. But it's interesting and it's great for us because we bring a lot of our members to China. We bring a lot of speakers to China from Europe, Australia, North America, South America, and it exposes them to the wonderful opportunities that are in China. And not only on the mining side, but they are a huge consumer of China products as well, of silver products as well in China. So on the fabrication demand side, they're right up there with some of the other more major countries with respect to silver fabrication.
So the actual producers in China, are there any actual pure silver producers, or is it a byproduct like many other places in the world?
Yeah, it is a byproduct-led program. There are silver mining regions where mining companies specialize in silver, but they mine everything. It's kind of like the global market in general. So for example, I believe in 2020, only 27% of newly mined silver came from what can be called a primary silver mine. And the rest came from mining activities related to gold, copper and zinc, and lead.
And I'm glad you brought that up because you have another list in the silver survey, and it's the top producing companies throughout the world. Number one is Fresnillo. They produce over 50 million ounces a year. And within the top five, after that, it's all gold and copper producers. And even in the top 10, you only have two other silver producers. Number 9 is Pan American, and number 10 is Hecla. And once again, all the other companies are gold and copper companies.
Well, you have Hochschild in that list. You've got Core Mining Company. I would consider them silver mining companies. There are others of that 15, including those that support the World Silver Survey. We have about 11 of those companies. But yes, look at silver mining is part of other mining activities. If you're mining for gold and you get silver, you're not going to throw the silver away. You're going to get the credit at the refiner or at the bank for that silver output. So true, with only 27% of silver coming to the market from a primary silver mine each year, it gives a lot of room and opportunity for other producers that are not necessarily considered silver producers to get into the game as well.
So in your report, Mike, you also spent a lot of time talking about supply and demand factors. And you mentioned that the silver supply will increase by 8% in 2021 to 848 million ounces, but demand is expected to increase by 15%. So maybe you can talk about some of the drivers behind demand, and especially when it comes to electrification and this whole
Sure.
use of silver in terms of this new green economy that we always talk about now.
I would be happy to. First on the supply side, we are indeed projecting that there'll be an increase in silver supply this year. And that's primarily a reason because of the COVID pandemic of 2020, which really affected key silver mining countries and especially companies that were shut down due to the pandemic. This year we project there will be an increase, and we also think that every sector in the demand side of the equation, whether that be jewelry or silverware or investment, industrial demand, photovoltaics, will all increase this year. And that's primarily a result of the global GDP forecasts that have been projected by the IMF, other leading economists throughout the world. It's going to bode well for silver. And you spoke a little bit here about green technologies and so forth. We just heard in the United States last night, President Biden talk about his infrastructure plan, his Build Back America plan, which is really heavily focused on green technologies, among other issues. So you look at solar will be a benefit. Solar power will be a benefit of that expansion. The electrification of vehicles. We like to talk a lot about how automobiles today, including internal combustion engines and hybrid cars and battery electric vehicles, consume about 60 million ounces of silver a year, and that number is going to grow. We project that number to hit around 88 to 90 million ounces by 2025. And the reason is, James, is the complexity of these vehicles will only increase as electrification gains ground. And it will gain ground not only from the consumer level, but also from a government mandate level. So for example, you're seeing states in the United States, at least, that are saying a certain percentage of cars by a certain time frame will have to be electric. And that's changing the whole fleet scope of these automobile manufacturers.
Very interesting. So, as you said, the number one consumer of demand is, or the number one component of demand is industrial. The next one is net physical investment. I believe it was around 200 million ounces, and a big part of that is exchange traded products. Maybe you can just talk about that demand also.
Yeah, it's been robust, and to say, quite frankly, if you look at last year, it was just a phenomenal year with over 330 million ounces of silver globally going into the various exchange traded products that are offered to investors throughout the world. This year we call for a little bit less number, probably half, about 150. But we also think that physical demand, the purchases of gold, of silver bars and coins, will only continue to increase. I mean, I defy you if you can get a silver coin or a silver bar in this country without a long wait period and a higher premium. I mean, the demand is through the roof. And I know that some of the mints, the smaller mints, are working around the clock to provide our U.S. mint with the blanks, the planchettes for the American Silver Eagle. And we have a new Silver Eagle coming out in this country this summer. So demand will only be stronger. So we do think investment demand is going to have another good year. We think that industrial demand will have a good year. And we think that on the demand equation, we're going to improve greatly over 2020.
So we spoke about demand. Let's talk about supply now. And a big component of supply, of course, comes from mine production, represents about 80%, give or take. The next component has to do with global silver recycling. And I was really surprised to see in your report, last year it was up 7% to 182 million ounces. And I guess my question to you is, does this mean every time we see the price of silver go from 25 to 35 to 45, we're going to see this wave of selling coming in from people selling all their scrap silver and selling their grandmother's silverware?
Well, it's a great question, and it's hard to really pinpoint that. It really is price dependent. We do forecast an increase in the silver price in 2021 over 2020, and that could lead to increased scrap supply. We do project a small increase for this year in the scrap supply coming to the market, but that's not always necessarily led by silver players. It's typically led by the gold dynamic. And when people turn in their gold, they'll often turn in all of their items, jewelry items. So silver can be thrown into the mix, but there's no question about it that as the price increases, there is more interest in returning these products to the market for a profit.
Also in your report, Mike, you talk about the Reddit effect, which was something we saw in February of this year. Maybe you can just speak to that.
Sure. Yeah, we caught wind right before that took place. I guess it was in late January, early February. And quite frankly, it wasn't really much of a surprise. What was great about it was the fact that we have a whole new demographic of investors in silver that come from all over the world, quite frankly. Many of them are of the younger generation, and it's to us at least, it's very exciting to see that they're enamored by silver. Look at their overall goal was to something that was probably unachievable. They started off with GameStop, and then they started off with BlackBerry and Bed Bath & Beyond, and then they eventually moved to silver. I understand that on early May there may be another attempt to do what they did back on February 1st or 2nd, and quite frankly, we're pleased that this whole new generation of silver investors is here, and we'd like to see them stay. So we're excited about what can portend down the road.
So the future for silver looks very promising.
Absolutely, James. It really does. This year is going to be a banner year for silver. Last year was terrific with respect to investment. Demand obviously was down, supply was down, but this year we see a small increase in supply, but an even greater increase in demand for silver-based products. We think investment will remain very strong, and we think 2021 is looking good for silver. The future is bright, as we say.
Well, that's a great overview of the whole silver space, Mike, and I want to thank you for spending this time with us today. And I want to encourage all of our listeners to check out the Silver Institute's website, silverinstitute.org. There's a wealth of information on that website, including the World Silver Survey. It's 87 pages It's got a ton of information. And is there anything else you want to add to that, Mike?
No, that was great. Thank you so much, James. And I would just reiterate your last point. Feel free to visit our website at any time. Feel free to get in touch with us, either by email or phone. We'd be happy to answer any questions you have about silver. And again, James, thank you for this opportunity.
Thank you. Hi, Randy. Thank you very much for joining us today for our first ever silver conference.
A pleasure, Jimmy. Thank you.
Given that you have such a big exposure to silver, I thought it would be a very good idea to have you speak. But before we sort of dive into the details about your various operating assets, why don't we just begin with a brief overview of Wheaton Precious Metals and the history behind the company?
Well, and timely, considering this is a silver conference. Wheaton Precious Metals started off as Silver Wheaton back in 2004, and we created the streaming business model back in 2004. And as the name would imply, we focused on the silver market entirely all the way through until about 2013. And the reason we stepped into the space is there was a lot of unique aspects about silver that we found very attractive. Silver has higher beta, higher volatility, which means that if you're investing at the right time, you can actually do very well with silver. 75% of silver is actually produced as a byproduct. It doesn't come from silver mines. It comes from mainly lead zinc mines, but copper mines and gold mines as a non-core byproduct, side by side with these other metals. And so created all sorts of opportunity for us to grow into the silver space. And so our focus, as I said, through the first 8 or 9 years of our company was entirely on the silver space. But we rapidly, sort of realized that we had a challenge in terms of growing. We got to a certain size, and there was just enough of other opportunities, enough benefits that silver had that gold also shares. And in 2013, we shifted into a precious metals company focused on both gold and silver. I'm still preferential to silver over gold, but there's just not enough opportunities in the silver space for us to grow our company to where we wanted to be. And so, we've now got 24 different mines delivering us metal, another 8 development projects, and constantly looking for new ways to continue growing and delivering a precious metals streaming company to our shareholders.
So Randy, I'm glad you brought that up, the fact that you used to be silver focused and now it's precious metals. But I'm curious why you made that move in 2013, and I bring it up because you see this happening a lot within the industry. And just recently, First Majestic, they acquired a gold producer in Nevada, which changed their silver production profile significantly. They went from 70% of their revenue coming from silver down to 50%. And also recently, Fortuna did the same thing when they acquired Roxgold, which is a gold producer in Africa. So I'm curious why you made that decision, but also why do you think so many people are making that decision to migrate over into the gold space?
Now, first thing we have to recognize the silver market is substantially smaller than the gold market, and so it's tough to grow to anything substantive in size. If you're a precious metals company, especially even silver focused, you do run into challenges with opportunity set. The opportunity set in the silver space is so narrow, and especially if you're a focused silver producer, keep in mind, as I said earlier on, 25 to 30% of silver comes from silver mines. The rest of it comes from copper mines, lead zinc mines, and gold mines. And so if you're trying to build a primary silver producing company, there is just not a lot of opportunities out there to continue growing your company. And so I think I hate to say it, it's almost a bit of a natural migration. We see it in a large number of companies that start out with silver roots and ultimately become broader precious metals companies. It's a natural migration in the precious metal space.
And Randy, of the 24 operating mines that you have agreements with, how many of those would deliver silver?
We're probably, 40% of our revenue over the next while will be silver focused. So we've obviously got some really big silver producers. Penasquito and Antamina are probably the 2 biggest ones in our portfolio. but that's offset with assets like Salobo, which generate a lot of gold production for us. And so, as I said, for the next 5 years, our average revenue based on the current price split, about 40% of our revenue will be coming from silver.
And Randy, how many ounces would you receive annually in total in terms of silver production?
Our target this year is between 22.5 and 24 million ounces of silver production. It stays pretty consistent. We're going to see growth this year coming from the Cozamin acquisition, which is purely silver. We'll get a little bit of silver from some of the other acquisitions. We always try and sweep it up. Even if we're getting gold, we'll try and catch the silver byproduct production too. And Keno Hill restarting up in the Yukon will also deliver us a bit of growth. Penasquito is going to see a little bit lighter silver grades over the next year or two, and so we'll probably see a slight decrease in silver production from Penasquito, but that'll be more than offset from, as I said, Cozamin and Keno coming on stream.
So 22 to 24 million ounces a year, that's quite significant. Like that would put you in, if you were an actual producer, that would make you one of the top producers.
Definitely, and when you sit and look at our development portfolio, the assets that aren't part of our current scheduled production growth over the next while, we've got assets like Rosemont, we've got Pascua-Lama, and we've got Navidad. Pascua-Lama, it's an incredible gold opportunity, but we have a contract with Barrick where when and if it gets built, or when it gets built, we get 25% of whatever silver that asset produces. That'll deliver us 9 million ounces of silver a year based on the original mine plan. Navidad with Pan American Silver down in Argentina, again, a couple, probably 2 to 2.5 million ounces of silver. And we should see down at the Rosemont project with Hud Bay, it's a copper project that's got a really good silver byproduct credit. Again, another 3 million ounces. So we've got a real heavy bias in our development portfolio towards silver. And if that comes on, obviously silver will become even more important within Wheaton Precious Metals.
Randy, you mentioned that your silver production this year will be between 22.5 to 24.5 million ounces of silver. What's the cash cost associated with those ounces?
Okay, so it's 22.5 to 24 million ounces of silver, and the cash cost is expected this year to be $5.81. Most of our contracts have fixed prices with inflation kickers on it, but we do have a few contracts where we're paying a percentage of the spot price. And so we're seeing a slight increase as spot prices climb, but we're still delivering very, very healthy margins on all of that silver production.
Randy, silver was up 45% in 2020, and it's up about 5%, give or take, in 2021. And given that you have such a high exposure to silver and that you're a royalty company, are you getting a lot more calls from pension funds and endowment funds that would like exposure to silver but don't want the risks associated with having an operating mine or investing in an operating mine?
Well, and that's the beauty of the streaming business model, Jimmy, is the fact that we do take so much of the traditional risks that you see in normal mining investments. We take that out, but we still deliver all the upside, all the commodity exposure, the price exposure, the exploration success. You know, one of the things that we're going to see, I think, over the next couple of years is as we see higher base metal production, that will probably lead to an increase in silver production. Again, remember that silver, the bulk of silver, is produced as a byproduct from base metals production. And so with these higher copper prices and higher lead zinc prices, I can tell you that on our growth side, most of the opportunities we're looking at right now at Wheaton are focused on funding developments in the base metal space and acquiring silver and gold byproduct production off of those base metals operations. And so, yes, we do see growth in that area. We are getting a lot of calls on this focus. Obviously, silver has outperformed over the last couple of years. Silver always does this. We've seen gold climbing on a pretty consistent basis now for the last 4 or 5 years, and we still see good strength to gold. But silver always lags and then outperforms, and so it just seems to be fitting the exact profile that we've seen for 40, 50 years. Every time gold moves, silver lags a bit and then outperforms.
I'm glad you brought that up because this is a question that I have, and I hear this question quite a bit. But gold is at $1,800 an ounce, which is not too far away from its all-time high, but yet silver is nowhere near its all-time high. Let's just call it $48. What's it going to take to see a significant move in silver?
Well, I think continued focus. One of the reasons I'm still very optimistic on silver is because I do think it's got plenty of capacity, but the fundamentals are so much stronger, the increasing demand. And if you look at where silver is being utilized on the industrial side, more than half of silver is now consumed in industrial applications, but it's all high efficiency electronics. Silver has one attribute: it conducts electricity and energy better than any other noble metal. It's better than gold, it's better than copper. And so when it comes to high efficiency electronics, or longer lasting electronics, mobile, look at today's world. Look at how important mobility is in today's world, all the way from smartphones and smart watches to electric vehicles. Everything is about mobility. And mobility, if you want batteries to last longer, if you want better operating, better processing power, silver plays a role. And it doesn't need to be a lot of silver. We're talking very, very minute amounts on a per unit basis. And so it doesn't change the cost significantly, but silver will play a role. And that's why we see just increasing demand for silver on the industrial side. The industrial demand isn't really what's going to drive the price of silver. It's going to be investor demand. And so the precious metal side is that, you have to step back and now look at the store of value argument behind the traditional one that normally gets associated to gold, but as I like to call silver, the affordable precious metal. It is a precious metal, and they're very qualified as a store of value. And so we're very bullish in terms of where we see silver prices over the next while.
Randy, you recently entered into a couple of new royalty and streaming agreements, the first one being with Capstone on their Cozamin mine, and also with Aris on their Marmato mine. Maybe you can just touch on those deals and just tell us about the silver exposure associated with those two deals.
Sure. Well, with Capstone at the Cozamin mine, Cozamin's located down in Mexico. It's been part of Capstone since the early 2000s, and Capstone comes constantly, continual improvement of this operation. We actually had a stream on this from 2009 to 2017 on the Cozamin asset, so we know it very well. It was a term agreement that we inherited when we took over a small competitor back in 2009. And to be honest, very happy to have Cozamin back into our fold and back into to delivering it. Our current stream is for 50% of whatever silver production from this mine over the life of the mine. That's a real key aspect with Cozamin that we wanted to get, mainly because that area of Zacatecas in Mexico, once you get into these strong dominant structures that host these deposits, exploration success is only a matter of putting the effort in terms of drifting out, and Capstone has had an excellent success in terms of moving these projects forward. And so really happy to have Cozamin back in, and will deliver silver production to us immediately. So a nice little addition to our portfolio. The Marmato project, it's a gold-focused project down in Colombia that has a bit of byproduct silver, not a lot. It is a combined gold and silver stream that we have with Aris Gold. This project is a unique one because they've got some small-scale operations right now, but the real juice of this agreement, the real excitement, is the deeper zone where they've had some good, strong drill results. Aris has been testing the theory that all these regional structures all coalesce into some discrete, more contiguous and more thicker contiguous ore bodies at depth, and the deep drilling has really supported that. And so the plan is to fund a development, a new milling site, a new access decline, an entirely new mining operation at greater depth. We do have an advantage in Colombia. It's a very three-dimensional country in the sense that all they got to do is go down to the bottom of the valley and decline in, and they'll be able to intersect these veins at great depth, or these structures at great depth. And so Marmato, we think, has got some real, it's a sleeper in our portfolio. I think it's going to really shape up quite nicely, and we should be getting a decent gold stream off of it and some pretty good silver byproduct credits too.
Now, you mentioned consolidation earlier, so I'm glad you brought that up because I want to pick your brain about this. And first of all, the Cozamin asset, what company was that associated with that you acquired?
Well, originally it was a company called Silverstone that had, it was a silver streaming company that was created back in the mid 2000s, 2005, 2006. They made a number of acquisitions, a little bit riskier acquisitions. They were taking on some of the assets that we weren't comfortable with, but they built up a portfolio, and it became an opportunity for us. They they had some trouble at one of their operations, and the shareholders weren't very happy with it. The shares were depressed, and so we stepped in and cleaned up the mess. It's actually been a very, very profitable acquisition for us. The Neves Corvo operation, the Navidad development opportunity, and Minto up in the Yukon, and of course the Cozeman stream all came as part of that package. And so still delivering good value for us.
Randy, you mentioned earlier about consolidation, and I just want to get your views on this. Last year in 2020, we probably saw at least a dozen royalty companies come public, and a lot of these names are trading at discounts to their price to NAV, but you're trading at a nice premium. Do you think we might, and others are trading at premiums too, but do you think we might see some consolidation going forward within the industry?
Well, I think it's a natural step. As you know, anytime we have, and the success that we've had is what breeds a lot of these startup companies coming into the space. When you sit and look at how successful we've been, but I think what a lot of those startup companies have had to do in order to get their foot in the door is give up on structures, or give up on, they don't have life of mine agreements, they have term agreements, or they have buyout clauses, or they have limited areas of interest, or and so I do believe the market is efficient in terms of how a lot of these companies are being valued. Their portfolio isn't quite worth what our streaming portfolio of assets is worth, and I think that's one of the reasons why we see the differential in market multiples. I do strongly believe, maybe sometimes naively, that the market is efficient. Sometimes it just takes a while, and so we're always looking at that, though, because if there are opportunities there, we do think it's a good way to consolidate, and I think it will happen. It's a matter of whether Wheaton's author to that or some of the others, but consolidation is just a natural next step. Whenever you have perhaps an overpopulation of anything, consolidation would represent a natural way to normalize that distribution. So,
Randy, we spent a lot of time talking about Wheaton Precious Metals and the silver components of your various partnerships. Why don't we just talk about Wheaton Precious Metals overall and get a view as to what's happening there. And I'm kind of curious about how many deals you and your team looked at in 2020, and how many deals have you looked at in 2021?
Well, these are good times for us right now. We're seeing a lot of opportunities, and I can say that the benefits that we delivered to Capstone, and Capstone's a great example. When we announced the Cozeman transaction, all you have to do is look at how their company has performed, how their share price has performed, to underscore what value a good stream delivers to a copper, a mid-tier, or any copper development story, or any company from that perspective. Streaming is a win-win situation, so it does create opportunities. We are as busy as we've ever been. We're currently looking at about 15 different opportunities right now, which is more than normal. We're typically looking at between 5 and 10 different opportunities. Where we're looking at is the base metal industry has really woken up from a bit of a slumber. It's been a long, quiet session in base metals, but over the last 6 months, we've seen copper prices move up. We've seen lead, zinc, and nickel prices move up. And all of that has stimulated a real desire for growth from a lot of mid-tier to junior, well, across the entire base metal space. But it's the mid-tier to junior sector of the space that we do have the need for outside capital in terms of building it, and that's what our business is. We supply outside capital to help companies grow, and so we are seeing a lot of opportunities in that space. Mainly it's copper projects. There's just not a lot of lead zinc projects out there, which, there's another storyline there. The fact that we don't see a lot of growth in the silver space, especially in lead zinc, which is where most silver comes from, provides further support for the silver market in the fact that we don't see a lot of supply coming on stream over the next while to offset this increasing demands that we see. And so but we are busy on that front. Our portfolio, the company is as strong as it's ever been. Well, in fact, it's stronger than it's ever been. We recently, at the start of this year, paid off our debt. We use a revolver to fund our growth, but typically, ideally, the amount of cash flow we have coming in after paying a healthy dividend, we like putting the rest of it back into the ground. But we're getting so much cash flow, we haven't been able to put it back into the ground fast enough. So we're constantly looking for new opportunities. We are excited. We have completed 3 transactions here in the last 6 months, and we're hopeful that we'll get another couple of projects coming on. The portfolio, good, strong organic growth already. Our mission, it's a personal mission of mine, is to get Wheaton up over 1 million gold equivalent ounces per year. And we're not far off of that. Our 10-year guidance, which we recently released, has us, it's a very conservative 10-year guidance. It doesn't count new acquisitions like Santo Domingo. It doesn't count potential expansions and growth at Salobo, our largest asset. But it gets us pretty close to, well, the current 10-year guidance is 830,000 gold equivalent ounces per year over the next 10 years. So good, strong growth and some excellent opportunities to get us up over that 1 million ounces per year.
So the 3 deals that you've done in the last 6 months, they're relatively small. And you've said in the past that you were looking at some large deals over $1 billion. Are you still looking at those? Are those still active?
We're not seeing as much opportunity in that space. I'll tell you, the market that we're looking at, we were looking at some pretty fair-sized projects that would require in the order of billions of dollars. There still is a few out there, but we have definitely seen that tighten up. And I think really where that comes from is a lot of those larger scale projects that have capital needs that high are run by the big diversifieds, and the big diversifieds are generating enough cash flow right now that they don't need the outside capital. And so what we're seeing now, most of the opportunities we're looking at, and definitely the ones that are going to crystallize in the near term, are between 200 and 500 million. As I said, there is a couple of opportunities out there for bigger scale. The one advantage we have is that the base metal industry definitely is much more capital intensive. And so the need for capital is higher there than it is in a lot of the precious metal space. Most base metal projects, the capital cost is measured in billions of dollars, whereas precious metals is typically measured in hundreds of millions of dollars. And so given that, the need for capital, I think there's going to be a continual demand for our capital and our streaming agreements to help fund those mid-tiers and those single asset development companies as they move forward.
Randy, if you were to enter into a larger deal, like $1 billion or more, would you do it alone or would you do it with a partner?
No, I'm pretty selfish when it comes to that. When we find assets, first off, we're very, very selective about the assets that we invest into. We only focus on assets in the bottom half of the respective cost curve. So my position is these assets are so rare, so hard to find in terms of good, strong operating margins and upside exploration potential, strong operators. They're so hard to find. A good stream is so hard to find that I don't want to share, quite simply. And so, the capacity-wise, this year we're going to generate close to $1 billion. In fact, at spot prices, we may even exceed $1 billion in free cash flow this year. We've got access to a $2 billion revolver right now that has an interest rate of 1.4%. Debt is incredibly cheap to us. It reflects the risk of our business. That's what the banks think of how risky our business is. They're willing to lend us on a revolver on a demand basis, $2 billion at 1.4%, which astounds me. But I also recognize why we deserve that. And so our largest transaction to date was $1.9 billion. We weren't, this was back the original Salobo/Sudbury transaction. We've got plenty of capacity to handle anything around $1 billion. We've had a number of agreements up in that range, and we know we'll see some more in the future.
Randy, your flagship property is Salobo, which is owned by Vale in Brazil. Can you just give us an update on that? I know the Latin American countries have been especially hit by COVID, and I'm just kind of curious how things are going there.
Things are going well at Salobo. It is our flagship asset. About a third of our cash flows currently come from this mine. Last year, it's consistently delivered well over 250,000 gold ounces to us on an annual basis. And it is going through an expansion phase right now. They hope to turn on the switch on the phase 3 expansion by sometime in 2022, in the first half of 2022. So just about a year out, we should start to see some stuff from that phase 3. I'll just address the pandemic risk. One of the advantages that we do have in the mining industry is a lot of the mines, including Salobo, are very remote and they have very limited access opportunities. But that also allows you to really restrict and control and put in good, strong risk management systems that limit the impact. And so Vale I think that the entire mining industry has actually done a reasonable job in terms of limiting those risks and trying to control that, so that we haven't had massive outbreaks at any of the sites, Salobo or anything else. And so, it has helped us in terms of moving forward. The Salobo mine itself, as I mentioned, it is already a cornerstone. It's the best asset in our portfolio. So I'm very pleased that it's also our most sizable asset in the portfolio, and it's going through some substantive growth. We recognize the exploration upside and the expansion potential when we did the original transaction back in 2013. And so it's, as I mentioned, this phase 3 expansion is going to increase throughput capacity by 50%. It's going to take it from 60,000 tons per day through the mill to 90,000 tons per day. We're also really pleased that Vale announced back in December that they introduced the concept. They haven't committed to it yet, but they introduced the concept of a phase 4 expansion. And in December, they were talking about having that up and running by 2027. And that would take it from 90,000 tons per day to 120,000 tons per day. So you can imagine how excited we are about this asset as it grows. Now, the one aspect of our forward forecast, and as I mentioned, we just came out with our 5 and 10-year guidance, and 5-year guidance has us at 810,000 ounces per year. 10-year guidance is 830,000 gold equivalent ounces per year. Those forecasts are actually made on the very conservative assumption that Vale doesn't continue stockpiling low-grade material, but in fact starts just processing all ore through the mill. And if they produce all ore, if they don't stockpile low-grade material, it will bring down the head grade. However, we would think that Vale will continue their current practice of stockpiling some of the lower grade materials to boost higher grade materials through there, and all of that remains to the upside in our production forecasts. We took the conservative approach in our production forecast of assuming that they were just going to process all material. We're still waiting for guidance from Vale in terms of their final mining plan for this phase 3. We do expect it in the next couple of months. Obviously, if they're going to stockpile, they're going to have to expand their mobile fleet slightly, and so they do need a bit of lead time to get that organized. But overall, it's just nothing but good news out of Salobo. And Vale, good strong partner. It's a brand new mine. It's got excellent infrastructure and very strong principles. It's just truly worthy of being a flagship for a company like ours.
Randy, as we wrap up here, can you just tell us what investors can expect in the coming weeks and months in terms of news flow out of Wheaton Precious Metals?
Well, we've got 15 different projects at various stages of review. I know that some of those won't pass our tests, our criteria, and so we won't even bother putting proposals into those. But I do think that there are some actionable opportunities there that will continue to develop or continue to add to our development pipeline. There is a bit of a bias towards developments, and so we are seeing some operating assets, but generally most of the funding is being put back into the ground, which is something that the mining industry has needed, especially the base metals industry has needed for a while. So I'm quite pleased with that. But we do have a really good opportunity set in front of us here, and hopeful that we can make a couple more acquisitions over the next short-term period. I think probably the nearest catalyst that I would expect is we are waiting for Vale to finalize their mining plan for this phase 3 expansion. And if they incorporate any type of continuation of their current stockpiling campaign to stockpile lower grade materials and focus on higher grade materials, that will be an add-on. That'll be a plus in terms of our own production profile, and that'll bump that up. And I think that's probably a decent catalyst in terms of we could see upwards of 50 to 70,000 ounces of more gold production on an annual basis starting next year from the Salobo mine than what we've currently forecast. And then as they firm up their plans with respect to a phase 4 expansion, and some of that opportunity gets pulled into play, we do think that there's great upside there. The Rosemont project with Hudbay continues to move forward. They've just released some great copper world discovery holes, which is in our area of interest, and it just underscores and outlines the excellent exploration potential at the Rosemont property. This is a property that hasn't seen any significant drilling since the 1990s under its original owner way back then. I think it was a Sarco back then. And so, the fact that Hudbay is getting close in terms of resolving the permit issues and hoping to start construction there relatively soon, I think, crystallizing that as a firm part of our future will definitely deliver some value. And so, again, we got good, strong organic growth. We've got good, strong organic cash flow, and obviously a portion of that goes back to our shareholders in the dividend form, 30%, a minimum of 30% per quarter. Our company is as strong as it's ever been, and we've got an excellent platform to continue delivering to our shareholders.
Well, that's a great overview. Randy, I'm going to put you on the spot now before I let you go. What's going to do better in 2021, gold or silver?
Oh, wow. You do know that I'm the chair of the World Gold Council right now, so this could come back to haunt me, but I do think silver will do better on a relative basis. There's just stronger fundamentals in the silver space, and we are seeing more gold opportunities coming in terms of the development side than we are in the silver space. Most silver comes from lead zinc mines, and we just don't see a lot of growth there in the lead zinc space. And so there's just some good strong fundamentals that I'm sure that silver will do better than gold. The challenge, of course, is silver is such a small market. So I think that everyone should have a little bit of both in their portfolio.
Well, Randy, thank you very much for giving us a great overview of Wheaton Precious Metals and also sharing your thoughts on the silver sector. If any of our viewers would like to ask Randy or another member of his team a question, by all means, send us an email to info@bloorstreetcapital.com, and we will make sure that question gets answered. Once again, Randy, thank you very much.
Jimmy, always a pleasure. Thank you.
Hi, Stephen. Thank you for joining us today.
Oh, you're very welcome, Jimmy. It's a pleasure.
Stephen, before we begin, why don't you give us a brief overview of the Gatos Silver story? Even though the company just went public in October of 2020, it's been around for many years. So maybe you can just tell the viewers a little bit of the history behind it.
Oh, certainly. So Gatos Silver is a silver-focused exploration, development, and production company. And we have a majority interest in an entirely new silver-rich with byproduct zinc and lead mineral district in the southern portion of Chihuahua State of Mexico. And over the last 10 years, we've acquired a mineral rights package totaling over 103,000 contiguous hectares. In fact, it is the second largest mineral rights package of our producing peers in Mexico. The only other company that has a larger package is Fresnillo. And on these mineral rights, we've discovered 14 separate zones of mineralization. And in 2014, we brought in a Japanese refining company, Dowa Metals and Mining, as a 30% joint venture partner to help us with the financing. And with this financing, we were able to construct and commission our first mine called Cerro Los Gatos on one of the 14 separate mineralized zones. And we did all of this while remaining private. And recently, as interest in silver and silver equities began increasing, we decided that this was the time to do a public listing. And on October 27th of 2020, we completed an initial public offering on the New York Stock Exchange and Toronto Stock Exchange, raising $172.5 million, making Gatos Silver, that IPO, the largest precious metals financing on the New York Stock Exchange and Toronto Stock Exchange in 2020. The Cerro Los Gatos mine has just completed its commissioning phase. It's operating now at its design production rate of 2,500 tons per day, and it is now cash flow positive.
Stephen, you have a very interesting shareholder base too. Why don't we just touch on that, and maybe you can also touch on your capital structure.
Sure. So as a result of our IPO, we've brought in some well-known international and highly regarded investment funds. As of post-IPO, our largest shareholder is still our founding shareholder, which is the Electrum Group. And Electrum still retains 43% of the outstanding shares. But interestingly enough, this second largest shareholder is Fidelity Management and Research. They came in a very strong way on the IPO, and post-IPO have continued to increase their ownership, and they now own 15% of the company. And then we have a pension fund that's been a relatively long-term holder of our stock. It's the Michigan Employees Retirement System, and they currently own 10% of the company. Then as part of the IPO, VanEck came in. They currently own 4%. Sprott Asset Management currently owns 4%. Exor Investments out of London currently owns 3%. This accounts for just under 80% of the outstanding shares of the company. And in total, we have 59.1 million outstanding shares. As part of the IPO, I mentioned just a moment ago that we raised 172.5 million. Well, we've utilized 113 of that during Q1 of this year, and we were able to purchase another 18.5% interest in the Los Gatos district, and we're now a 70% owner of that entire district. And we retired a working capital facility that we were using for our commissioning.
So, Stephen, that's a great overview of the Gatos and also the history behind it. Why don't we just talk about the operations now and give us an overview of what the production numbers were like in 2020 in terms of the number of ounces produced, and also what your guidance is for 2021.
Well, due to COVID-19, 2020 was a challenging year. We were still commissioning the operation when the COVID-19 pandemic started. And by May of 2020, the infection rate was dramatically increasing in Mexico. And in April, the Mexican government mandated an emergency health suspension of all businesses, including mining. So we effectively lost 2 months of production, but we used the time to acquire PCR molecular testing capabilities for COVID-19 and institute some strong COVID-19 prevention protocols. So when we reactivated production in June of 2020, we resumed commissioning at a slower pace to ensure that we could maintain our COVID-19 prevention protocols and prevent an outbreak of the pandemic at the project. And I can say we're very proud of the fact that we have never had an outbreak of COVID-19 at the project to date. So we achieved that, and we're now operating at our design 2,500 tons per day. Our process plant is performing beyond our expectations. Silver recovery is just over 86%, and it's 1% above our budget. Zinc recovery is 73.3%, and it's exactly on budget. And the lead recovery is at 87.1%, and it's 2% above budget. So 2021 is our first full year of production, and we're calling it a year of optimization. We expect to produce between 7.5 to 7.9 million ounces of silver, 4,500 to 5,000 ounces of gold, 40 to 42 million pounds of lead, and 49 to 52 million pounds of zinc. And we expect to do that at an all-in sustaining cost of between $17 to $17.50 per silver ounce. And in terms of optimization, there are a number of strategic capital initiatives that we are going to be affecting to enhance production proficiency and best-in-class standards. So we're expecting sustaining capital expenditures of between 65 to 75 million this year. It'll probably be the highest year for sustaining capital during the project's life. We'll be constructing a paste plant for the Cerro Los Gatos mine to allow us to inject tailings directly back into the open voids created from the mining. We'll be adding additional tailings capacity by putting another lift on our tailings dam. And we'll be installing the second mine refrigeration plant at the mine. We installed the first one in 2020. It's been highly effective at maintaining good ambient temperatures in the underground environment, and we'll now be constructing the second one.
Stephen, what did you say your guidance is for silver for 2020 or 2021?
yet between 7.5 to 7.9 million ounces of silver.
So that's a big number, and that's a big increase over 2020. Was it 4 million in 2020?
Just over 4 million. And of course, recognizing that 2020 was a ramp-up year, and that we lost a couple of months due to COVID-19.
Stephen, that's a great overview of the operations. Why don't we touch on exploration now? Because I think this is one of the really interesting aspects of this story is the exploration upside. Like you said earlier, you have over 100,000 hectares of mineral rights, so you have a lot of land to explore. You've identified 14 mineralized deposits, one of which is Cerro Los Gatos. Why don't we just touch on the exploration that you're going to do at Los Gatos, but also some of your other targets?
Well, in December of 2020, with some of the proceeds from the IPO, Gatos Silver commenced a 27,000 meter exploration program to convert Cerro Los Gatos, this is the operating mine, its remaining inferred resource, which is 3.7 million tons, to the measured and indicated category. And we actually expect to discover additional resources beyond the 3.7 as part of this program. The deposit is completely open along strike to the northwest and to the southeast. And we're currently and we recently put out initial results from that program, but we expect to be doing that drilling throughout 2021. So that's a big program for us. The Los Gatos joint venture also intends to reactivate Los Gatos district exploration. Now, this is significant because once we focused on the development of Cerro Los Gatos, we redeployed all the drills in the district just on that one zone. So there has been no district exploration conducted since 2012. And we'll be starting with the second most well-known zone, which is the Ester resource, which is located only 4 kilometers away from Cerro Los Gatos. And we also believe that it's an analog to Cerro Los Gatos. So during the first quarter of 2021, Gatos Silver, and this is not part of the joint venture, this is 100% Gatos Silver, will begin a 5,400 meter exploration program on its wholly owned Santa Valeria project. Now, the Santa Valeria target has been developed through regional geologic work by Gatos Silver's exploration team. And it defined that, or we determined that the 14 zones of mineralization within the Los Gatos district form part of a very large basinal structure that hosts mineralization zones. And we began looking for the other side of that basin and found it about 20 kilometers away. And once we were able to compile a package of mineral rights, this is the Santa Valeria project. It's geologically comparable to Cerro Los Gatos, and we're pretty certain it contains similar mineral content. So the commencement of this extensive program reaffirms Gatos Silver's commitment to create value through advancement of what we believe are exceptional assets. So the multiple zones that we identified within the district we believe, position the company to add substantial new resources to the extensive Los Gatos joint venture mineral rights. This is the 103,000 hectares and its 100% owned mineral rights at Santa Valeria.
So the drilling that you're going to do at Cerro Los Gatos, you're converting those ounces into reserves?
Correct. So we currently have 10.5 million tons of measured and indicated resource at the Cerro Los Gatos deposit. And the mine plan that we're mining with now contemplates the extraction of those 10.5 million tons. But we fully expect to add another 3.7 million tons, which will do one of two things: either extend the life of Cerro Los Gatos, but more importantly, and what our objective is, this will help justify expanding Cerro Los Gatos production rate from 2,500 tons per day to 3,000 tons per day. And it has a meaningful positive impact on the NPV of the project.
And Stephen, is the processing plant currently set up for 3,000 tons a day?
We think so. We contemplated, even as part of our feasibility, that Cerro Los Gatos would be able to mine at 3,000 tons per day. And in fact, we did two mine plans. We did a 2,500 ton per day mine plan and a 3,000 ton per day mine plan, and both worked. But we decided to be conservative and start the operation at 2,500 tons per day. And only when we got it stabilized at that production rate would we then contemplate the expansion to 3,000 tons per day. But we were so confident, even back then, that we could achieve that, that we purchased equipment that has capacity to produce at 3,000 tons per day for the processing plant. The mills are both large enough to handle 3,000 tons per day. And during our commissioning phase at the processing plant, we actually did ramp it up to 3,000 tons per day to prove that it could run at that capacity. So we thought possibly we may have to add some flotation capacity, but we're now thinking we probably don't need to do that. And by the way, that processing plant was built to a state-of-the-art standard. It's fully instrumented. It only requires 13 people per shift to operate everything from crushing to grinding, to flotation concentration, to tailings management.
Stephen, just put that into perspective. When you say it only requires 13 people on a shift, what would a traditional or conventional mill require?
Twice as many people. And so we have everything instrumented, and in real time, during the process of continuous process of making concentrate, we know exactly what the silver grade is, we know exactly what the lead grade is, we know exactly what the zinc grade is, and we know when those grades change. And when they change, because of the instrumentation, the amount of reagents that we're using automatically changes so that we can optimize the metal recovery from the feed that's going through the plant. And that's one large reason why we've been able to exceed our forecast recoveries.
Stephen, you mentioned earlier you have an extensive exploration program going on at Cerro Los Gatos. How many rigs do you currently have there?
We currently have 5 rigs there, and we have 3 at Los Gatos. One that is setting up now to start the work at Esther, and that's the reactivation of the district exploration, and one at Santa Valeria.
So you're going to be quite busy. A lot of drilling results coming out in the next few months.
There will be, and I can tell you that once we reactivate the district exploration, we won't stop that for decades.
Can you just speak to the general geology and similarities in the geology between Cerro Los Gatos and also Santa Valeria?
Certainly. So all of the discoveries that we've made within the Los Gatos district and at Santa Valeria are buried epithermal deposits. So one of the features of this area, and the reason that it remained undiscovered for such a long period of time, is that there are no mineralized outcrops on the surface. And so Cerro Los Gatos sits about 75 meters below the surface, and the other zones of mineralization vary. Now, being classic epithermal deposits, the zonation is really quite important in these deposits. And that is that the metal distribution throughout the deposit will vary. But generally, these are classic epithermals. And what happens is that when you get higher in the system, we start to see more precious metals dominance in the metals. So you'll see higher silver grades, you'll see higher gold grades. And as you progress lower into the system, the metal content begins to transition, and we start to see higher base metals content. in our case, zinc and lead, and very deep in the system, you start to see some copper profile. Now, the boiling zone of each of these zones of mineralization, as I said, varies because there's been post-mineralization faulting, and it's actually shifted some of the zones relative to their nearest neighbor. So the boiling zone for Cerro Los Gatos, for instance, sits between about 75 meters to as deep as 400 meters below the surface. And then in terms of extension, it's still wide open along strike. So when we refocused all our efforts on Cerro Los Gatos, which was right after we formed the joint venture, and DOA was very keen for us to try to create an operating mine there within 5 years. So the first thing we did with the funding that they provided for us was to change the exploration that we were doing in the district, and we focused all of it on Cerro Los Gatos and turned it into a definition drilling program, which meant that we began infill drilling. And as we did that, two things happened, and one of them was quite unusual. One is the tonnage increased dramatically, and we expected that. But secondarily, the grade, and in particular, the silver grade, improved dramatically. And the reason that happened is that as we did the initial exploration in Cerro Los Gatos, and if I showed you the first resource calculation that was ever made there, it looks remarkably similar to the current and existing ester calculation, which, by the way, was done in 2012. But through this infill drilling, we began to understand better the zonation of the metal content, because we didn't know how close to the surface the deposit came. And we began fanning holes up higher and higher in the system to try to find the top of the deposit. As we did that, we began seeing higher and higher silver grades. And so our silver content increased multiple times over what the tonnage did. And we're now going to take all the learnings from that detailed definition program in Cerro Los Gatos and use them when we reactivate the drilling at Esther. Because now when we look at the existing data at Esther, we realize where we were in the system. And we think we know how we can rapidly drill out the Esther deposit and see the same increase in silver profile that we saw with Cerro Los Gatos.
Stephen, you spent a lot of time talking about the operations and also the exploration upside associated with Gatos, but the stock's been under pressure in the last few weeks, and I've had questions from shareholders regarding that. Can you just speak to why you think the stock's been under pressure?
Well, I think when we provided our guidance for 2021, and we did that during our recent investor day, some of the market was a little disappointed that our silver production was going to be a bit lower than they were anticipating from the feasibility study. But there's good reasons for that. And primarily, early in the quarter, we were adversely impacted by that freak storm in West Texas, which shut down the natural gas supply. Now, West Texas provides natural gas to Mexico, and that's what powers the national grid in northern Mexico. And so as a result of that, we were shut down for an entire week. We had no capacity to run the processing plant. We had no capacity to continue mining. And that set us back. And we knew that that was going to influence our guidance. We also knew that once we were able to reactivate, that we should be able to make up a fair bit of the shortfall. But we are anticipating during 2021, and we're calling it a year of optimization, that we will need to maintain strong COVID-19 prevention protocols throughout the entire year. It has been instrumental in our success, but it does impact our productivity. Maintaining social distancing, having to test employees, having a number of employees who test positive before they return from their breaks, impacts our productivity. So that all factored into the lower guidance for this year. And secondarily, when you look at the all-in sustaining cost from our guidance, which is $17 to $17.50 per ounce, it's a bit higher than we first forecast in the feasibility study. But this is also the year that we are spending the single highest amount between $65 to $75 million on sustaining capex. And of course, the all-in sustaining cost per ounce incorporates the amount of sustaining capex that we'll be spending. But as I mentioned earlier, Jimmy, in every one of those projects, all of them are being done to increase the productivity and help us to drive greater value. And what I'd like to say to shareholders is, and potential investors, is that you should see a meaningful performance improvement in the second quarter of this year.
Stephen, that's a great overview. Thank you. In the next few minutes, why don't you just tell us what shareholders can expect in terms of news flows coming out of Gatos Silver, and also what could take the stock higher?
Well, you should, we've put out an initial press release on the initial results from the Cerro Los Gatos drilling. There'll be many more of those coming out. We're just getting started on that program. And interestingly enough, every hole that we drilled on that extension drilling program intercepted mineralization, except for one of them. Now, that's a pretty good hit rate, and we're expecting that to continue through that program. Secondarily, you should expect to soon start to see results at Santa Valeria. Now, we're very excited about Santa Valeria, but remembering, this is a proof of concept program. So it's very early days. We have just drilled one hole, and we're just collaring the second hole now. But I have to say that we're optimistic, and soon you'll be seeing results from that. We just received the permits to restart the district exploration, and as I said earlier, that's going to be occurring at Esther. This is the first drilling at Esther since 2012, and based on what I provided in terms of how these mineral deposits exist, how the metals deposition is distributed through the deposit, we fully expect to use our extensive knowledge on Cerro Los Gatos to very quickly increase not only the tonnage, but also the grade of Esther. And once we start that exploration, we will not be stopping district exploration for years and for decades. So I think a lot of what you're going to see over the course of 2021 are exploration results. And we want the market to understand that Gatos Silver is about much more than just Cerro Los Gatos. It's about an entire district with 14 zones of mineralization. Every one of them, we anticipate, we hope, is another Cerro Los Gatos. And we're very confident that we can grow this district year on year, not only in its resource size, but also in its production rate. And what you'll start to see beyond 2021 is us doing a feasibility to expand the production rate at Cerro Los Gatos based on the fact of our success in converting the remaining inferred resource at Cerro Los Gatos to measured and indicated. This will allow us to take the production rate from 2,500 to 3,000 tons per day.
Stephen, that's a great overview of the Gatos Silver story. I want to thank you for that. And if any of our viewers have any further questions for Stephen, by all means, send us an email to info@bloorstreetcapital.com. I'll make sure Stephen or another member of his team responds. And if anybody would like some research on Gatos Silver, send us an email to info@bloorstreetcapital.com. And with that, Stephen, thank you.
Thank you, Jimmy. It's been a pleasure.
Good morning, Brad, and thank you for joining us today.
Hey, good morning.
Brad, before we begin and before we do a deep dive on Endeavour, why don't you just give us a brief overview of Endeavour Silver and a little bit of history on the company?
Well, today we are a mid-tier producer of silver and gold. We're listed in Toronto and New York, and we have 3 high-grade underground mines operating in Mexico. When I started the company in 2003, it was really at the beginning of this long-term commodity bull market. And the whole premise of founding a silver company was that gold was on the move and silver was still flat on its back in 2003. And I decided to form a silver company and go looking for assets in the silver and gold business that could become core through the drill bit. In other words, typically projects where we were hoping to make a discovery. And we got very fortunate, right place, right time, right idea. And here we are 17 years later.
Very good. So Brad, your flagship mine or your primary mine is Guanaceví. It produces around 3 million ounces of silver a year. Why don't you give us a brief overview of that mine? It had a very good 2020. Production was up, grades were up. Why don't you just tell us about that?
Yeah, like all mines, you know, it kind of ebbs and flows. And when we acquired it in 2004, it was basically a fully built and permitted mine and plant facility that had closed for lack of ore. And when we did our due diligence, we recognized that there was very significant exploration potential simply walking out along strike from the historic mines, and virtually no attempt to explore along strike to find new virgin discoveries hiding below surface. So that was the value proposition when we acquired Guanaceví in 2004, and we closed that deal in May. We started drilling in June of 2004, announced the first 12 holes for a fabulous new discovery in July of 2004. By September, we were collaring a decline tunnel to access the discovery, and by the end of the year, we were in production and cash flow. So it was a real eye-opener for me because we acquired it principally thinking about making a discovery and not about everything else. And the fact that we were able to move so quickly from deal to discovery to production was the discovery of our business model, shall we say.
And so how many ounces do you think you've pulled out of Guanaceví since the mine went into production?
When we fully drilled out our first discovery at Porvenir Norte, I had estimated before any resource estimate that there was up to 40 million ounces of silver equivalents. And we've now produced that. And we still have, after 16 consecutive years of production, a 5-year forecast internally. And we haven't finished drilling all of the obvious targets. So it's been a remarkable mine for us. And like you said, it's our cornerstone asset. We're actually producing closer to 4 million ounces of silver and equivalents per year with the hitting of the reset button in the last couple of years to close the original mines and open up new high-grade mines.
So Brad, your production at Guanaceví was up 22%, grades were up 30%. What exactly did you and your team do to cause this increase?
After years of enjoying great operational performance and profits, Guanaceví fell on hard times during the heart of the bear market, 2017, 18, 19. We lost money. And the reasons are very simple. There was 2 reasons. Significant underinvestment by the company during the bear market, and underinvestment in our people, underinvestment in our equipment, in the actual mine development. And so we ended up, instead of mining, the other main reason, instead of mining shallow, thick, and rich ore bodies like in our heyday, we were now in the deep bowels of the earth, 700 meters down, trying to survive on narrower, lower grade routes of the original discoveries. And so the solution to our problems were twofold. Firstly, we needed to make sweeping changes to professionalize and get back to the level of productivity we used to be at. So that meant replacing select managers and supervisors, retraining the workforce where necessary to reduce dilution and adopt different mining methods such as long hole mining, complete replacement of the old mining equipment fleet with new equipment, and virtually everything else. So it wasn't any one thing, it was everything. We took a look at everything. And fortunately, we had made some new discoveries that were kind of stuck in permitting. So we finally got them through permitting and into development. And by the time 2019 rolled around, we were able to actually close those original deep mines and open up 3 new higher grade mines, which we're currently living on now and for the next several years. Those mines are called Malache, El Curso, and Santa Cruz Sur.
And I guess this is one of the challenges associated with underground silver mines, is that you're always chasing the grade.
Well, these types of deposits are typically thicker and higher grade at the top and narrower and lower grade at the bottom. So you end up with the gravy up front, which is good. And then, of course, as you refine your productivity, you can get your costs down to continue generating profits as you go down on these systems. Thankfully, the 3 new ore bodies are all relatively shallow in the context of the district. So we're still in that kind of shallow, thick, and rich part of the system.
So are we going to continue to see this increase in production and also grade into 2021 that we saw in 2020?
We have enough optimism on the exploration potential to replace reserves and actually expand the resources that we're going to consider during the course of this year a possible plant expansion.
So the other positive development that came out of 2020, Brad, was your all-in sustaining cost. In 2019, it was $21.19 and it dropped down to $17.59, a huge improvement. Are we going to continue to see this trend into 2021 and ensuing years?
On the cash costs, yes, we think that $5 to $10 broadly is an appropriate target for our cash costs per ounce of silver, net of the gold credit. There is a big gap between all cash and all-in sustaining costs. And there's normally a gap because in all-in costs, you've got life of mine, exploration expenditures and capital investments and G&A and royalties and taxes. So that's the reason for the gap. There's a big gap at Guanaceví for another reason. One of our 3 ore bodies, El Curso, has an extraordinarily high royalty on it. So it goes straight to the AISC. And in addition, we've used up most of our tax loss carry forwards, so our taxes have gone through the roof as well. The short answer to your question is yes, we can maintain this kind of level of cash cost and AISC going forward, and we'll try and squeeze them as best we can, but it's hard to get away from the royalties and taxes.
You can never get away from those taxes.
Correct.
So Brad, one of the elements that I really like about the Endeavour Silver story is this Terra Nera, which is going to be a real game changer if and when it goes into production. It's effectively going to double your production from 3 million ounces to 6 million ounces. Why don't you give us an overview of this project?
Yeah, so Terra Nera is another one of these classic low sulfidation epithermal vein systems that we mine at each of our other mines. Guanaceví, Bolañitos, and El Campos are all of the same type. So we recognize the nature of the beast at Terra Nera, and we were very fortunate to acquire that project several years ago for $2.75 million. We now have a total resource and reserve base of 80 million ounces silver equivalents. And we took a 2-year break from drilling, but we're back drilling to expand that. And we are optimistic that we can grow the total resource base at Terra Nera to 120 million plus ounces of silver equivalents. It is basically the largest discovery since inception for the company. It will become the next core asset. It'll be our biggest and lowest cost mine. And having found it, we're now in the final stages of economic evaluation. We're probably 80% done our feasibility study, expecting that report this summer, at which time we plan to go to the board for a green light to develop the project.
And so go to the board. When do you expect to do that?
Hopefully in August.
And then you're going to make a decision about construction?
We're presuming that decision will be positive, and that would allow us to break ground by the end of September. It's a 2-year construction and commissioning period, and so we would expect to see production and cash flow in late 2023. I should point out that we did set aside a $9 million capital budget in the first half of this year. specifically for ordering long lead items. So we've already purchased and taken possession of the 1,500-ton ball mill. It's sitting in a warehouse in Puerto Vallarta. We've been busy ordering mining equipment. Last year's pre-feasibility study assumed long-term leasing of all our mining equipment, but it actually gives better financial returns to just buy it up front. And we've also started on the temporary construction camp. We now have 48 beds installed in a trailer camp, heading for 400 by year end.
So I got a place to stay if I come down there for a site visit.
You do indeed.
And what about then, why don't we touch on the economics, the NPV and also the payback?
So last year's pre-feasibility study was at significantly lower metal prices, I believe $16 silver and $1,400 gold. But it gave robust economics, 137 million after-tax net present value, 30% internal rate of return, 2.7-year payback period. And if you actually plug current prices, approximately current prices into that model, 1,700 gold and I can't remember, $25 silver, it does wonderful things to the financial returns. I mean, the NPV more than doubles to almost $300 million after tax. The IRR almost doubles to 55%. The payback period crumbles to like 1.4 years. So at current metal prices, the project's a home run. And what's really special is the costs driven by grades. It's one of the highest grade deposits to be coming to production in the sector, and therefore the costs will be amongst the lowest in the sector. Last year's study estimated cash cost to produce silver, net of the gold credit, at zero. So basically gold pays for the mine and the silver is free. And even on an all-in cost basis, life of mine, we are estimating the cost to produce silver at $2 per ounce for 10 years. So it will be one of the lowest cost mines in the sector.
So I'm glad you brought that up because I saw in your deck that the all-in sustaining cost was $2.10. And so the reason why it's so low is because of the gold credits?
No, because it's still a 60 to 65% silver-rich deposit. The gold credit is a minority of the production. It helps clearly, but even on a co-product basis, if we were just estimating our costs based on co-products instead of byproducts, it would still be close to zero cash costs and sub $10 all-in costs on a co-product basis. So it's a very high-grade, low-cost ore body.
And when you say high grade, can you quantify that?
Yeah, the first 3 years will be up north of 400 grams silver equivalents per ton, fully diluted and delivered from the mine to the plant. Close to 500 grams actually in the first couple of years. Again, one of the higher grade mines in the entire sector. Even at the end of a 10-year mine life, and I should point out that 10 years is just based on the reserves, and with additional resources, we expect that mine to go much further than 10 years. But we're mining 350 gram rock at the end of 10 years. So pretty special deposits.
Yeah, that sounds very special. Brad, your exploration budget for 2021 is $10.2 million. Can you just tell us what the breakdown is, how you're going to spend that $10 million?
Yeah, in general terms, we have 5 pots this year: Guanaceví, Bolañitos, Terronera, Parral, and Chile, and they're all receiving approximately $2 million each.
And the other thing that I thought was quite interesting in your deck is the capital structure. Given how long you've been in business, you got a very small float. So maybe you can just speak to that and also just touch on your shareholder base, what the breakdown is between institutional shareholders and also retail.
So there's less than 160 million shares out, even after 17 years. So it is pretty special. And the reason is that we were able to get into cash flow very quickly and just tap the equity markets as needed for growth. And in fact, that's been our policy for many years. We've raised a bit of money in the last couple of years in the equity markets through what's called an ATM facility. And that money is sitting in the treasury for the development of Terronera. I should actually say that how are we going to finance Terronera? Last year's CapEx was about 100 million, and we expect this year's CapEx to be a little bit higher, around 120 or 130. We do like the traditional 65-35 debt equity split, and the equity obviously is covered by our cash and cash flows. So the main focus of management between now and August is actually a debt package, because we don't have any long-term debt at this time. And even taking on $60 or $80 million of term debt, given our cash will approach $100 million by the end of this quarter, puts us in a pretty good position. So that's where our cash is going to get allocated to, and that's mainly the reason why we have such a tight share capital structure even after 17 years.
Very good. So let's touch on your shareholder base. Just give us a breakdown between institutional and also retail, and maybe mention who some of the institutional shareholders are.
So there's about 15% of the company held by three indices, the GDXJ, the GDX, and the S&P TSX Composite Index. So these are all holders of the stock, about 15% combined. And there's at least another 20% by individual institutional holders. We don't have any dominant institutions because we haven't actually done a bank organized financing for over a decade, 11 years. And normally institutions like to come into companies through treasury offerings, and we just haven't had any. So, but you know, there's some recognizable names, Globex and Renaissance and many others.
So I guess the brokers aren't too happy with you.
Well, you know, we have a pretty good following because there's always the opportunity to raise money and you know, get into mergers and acquisitions. So we have good relationships on the street.
I noticed you have 10 brokers covering you, which is quite exceptional.
Yes, thank you. I think it's also a function of the fact that the silver space is actually pretty small and actually shrinking. And we've seen some of our peers, almost all of our peers, actually go to gold in recent years. And we remain, I think, the one company that's still dominantly silver.
Why do you think we continually see this shift into gold by silver producers?
Because there's nothing to buy in silver. And this is a very important point. First of all, there's very few primary silver producers on the planet. 70% of all new mine production every year doesn't come from silver mines. It comes from copper mines and lead zinc mines and gold mines, and mostly in large global diversified producers like BHP and Rio Tinto and Codelco, Polymet. So we're just not a big sector, primary silver sector, and it's hard to find silver dominant deposits. But trust me, we've worked really hard to get the ones that we found. There is another way to differentiate Endeavour from the entire peer group of silver producers, and that is our approach to growth. We have always focused on discovery and fast-track development, and we've never gone out and bought another company in 17 years. Again, I think that's points to our tight share capital. We prefer to grow organically, and because of our discoveries, Terra-Nera and Peral, both in the development pipeline, are discoveries of ours that we now propose to build to production. And you know, we'll produce 6 to 7 million ounces of silver equivalents this year, dominantly silver. And Terra-Nera alone doubles that number to 12, 13 million ounces when it comes on stream in 2.5 years. Peral, which used to be a 4 million ounce per year mine, we hope to bring back on by the end of 25 at 4 million ounces per year. So not only do we have internal growth, we don't have to go outside to grow the company at all. We just have to build what we find. We are not only silver dominant, we're going to get more silver dominant. As I mentioned, Terra-Nera is 60 to 65% silver over gold. Peral is 100-0 silver over gold. So if anybody has the capacity to take on gold and remain silver rich, it would be us. And one last point on this whole theme, because in our sector, there's nothing to buy, and therefore everybody's gone to gold. We not only stand out as being silver dominant with internal growth, ultimately we stand out as a possible takeover target.
Interesting. Now on that point, I noticed one of your shareholders is Fresnillo, the world's largest silver producer. They produce about 50 million ounces a year. Can you just tell us about that relationship? How did that start? And do you speak to these guys on a regular basis?
We do. We chat quarterly ever since 2004. Both Guanaceví and Bolañitos were originally Peñoles mines. Fresnillo is actually the gold silver spinout from Peñoles. And we built a relationship with the managing director of Peñoles back in 04, 5, 6. And we structured deals to buy out their underlying ownership of those mineral concessions in order to allow us to go ahead with the redevelopment of Guanaceví and Bolañitos. We were very surprised when at our first lunch, Jaime Lomelin, the managing director of Peñoles at the time, when we got to talking terms on Guanaceví, he said, "Bradford, we're going to do business, only keep your cash. We'll take your stock." And so their 2% holding in Endeavour came from two deals, buying out Guanaceví and Bolañitos.
Interesting. Brad, you recently came out with your Q1 numbers a couple of weeks ago, and in that press release, you had a lot of positive developments. One of them was being added to the GDX. Congrats on that. And
Thank you.
something else that I saw was you also sold one of your assets to Vangold. Maybe you can just tell us some details on that, how much cash you got, how much stock you got.
Yeah, so Cobo was our third producing asset from 2012 to 2019, but we ultimately exhausted the discovery that we found there. The reserves were gone by the end of 2019, so we did close the mine. And then considered what next, and we felt that rather than putting up the $4 to $5 million reclamation costs to just shut it down and go away forever, we thought there was a chance that somebody could want it. And Vangold has their own small discovery not far from the El Cubo mill. So we approached Vangold on the concept of basically making them the next silver producer in Mexico. They loved the idea. We worked on what we felt was a win-win transaction because they didn't have the cash to meet what we thought was a fair price. And we negotiated a price, $15 million, plus some top-up payments down the road. We took a chunk of that in stock. Their stock has now doubled. We're fully supportive, obviously, of Vangold's efforts to put Cubo back into production. And so we're sitting on proceeds of approximately $25 million. Fully supportive of the deal. We agreed to a one-year lockup of our shares, and we're in no rush to sell. We're very supportive of getting Vangold up and running as the next silver producer in Mexico.
That sounds like a great story. Instead of paying out $5 million, you got, did you say 15 million?
Nominally 15, but with the stock component, it's worth 25 now.
Something else in that press release that I thought was quite interesting was the fact that you sold 623 ounces of silver in the quarter, but you held back 523,000 ounces. And I was curious, is this something you do on a regular basis? And is this not a risky endeavor? Because silver might be at $25 today, but it could be at 30 next month, or it could be at 20.
So I'll give you two answers. The direct answer is that we do this from time to time, not regularly, and it's specific to our view of the short-term silver price. We did it last September when silver had run to 29 and fell all the way back to 22. And we decided to hold on to a bunch of metal inventory effectively. We did sell that metal inventory in Q4 at a very significantly higher price. I think we got 26 or 27 bucks for it. And we took the same view in the first quarter. Towards the end of the first quarter, we were in a correction mode. And we felt that just being patient, we could resell that metal in Q2 for higher prices. It's basically a sales strategy, nothing more, nothing less. The bigger picture, though, and allow me to prognosticate, you know, when I entered the business back in the 80s and 90s, that is the public mining business, it was a given that the CEOs of gold companies primarily should be agnostic to the price of the metal because it was impossible to predict. And that's kind of how hedging got so popular. I mean, that plus the fact that in the 80s and 90s, mining companies were able to go to bankers to effectively borrow gold forward, sell it, get the cash and build the mine, and then replace the gold. And so they had to have a hedge in order to do that. But where I'm going with this is that if you're agnostic to the price of the metal and more than happy to hedge it because you don't know where it's going, then you ultimately are going to get in trouble, because gold by definition and silver, these are cyclic metals. And the cycles are actually very recognizable. And if you're going to remain agnostic, you better be pretty nimble on your hedge. We don't hedge. We don't hedge because we're not agnostic. I've been a bull since 2003, and I remain a bull. And when we get through the top of this cycle, I'll stop being a bull. But that's why we don't hedge. And I think that's why from time to time we try and take advantage of the mini cycles.
And when you talk about the top of this cycle, do you care to put a number on that?
No, I don't want to put a number on that, but I'll give you an exercise, a process to try and understand where we should be going. In the long-term view of things, this is the third leg of a long-term commodity cycle. It started in March of 2001 when gold came off of $250 an ounce. And it had a first leg up to 2007, the spike down in 2008, a massive second leg up to 2011, a prolonged downturn 2012 to 19, and now we're 2 years into the final leg of this commodity cycle. Simply look at recent history back to the 70s and 80s. And I like to use the gold-silver ratio to try to give us an idea of where we're going. Silver, by the way, always outperforms gold in the bull market because it's a much smaller market, it's much more volatile, and it's dominantly industrial and only a monetary metal during bull cycles. So I feel that if you look at the recent history of the gold-silver ratio, it was around 50 or 60 at the start of this commodity cycle. It got as low as 45 in 2007, spiked to 85 in the global financial crisis of 08. Reversed all the way down to 31 at the peak, the almost mini bubble peak of the end of the second leg in 2011. Reverted to 85 for most of the bear market that followed. Actually crumbled to 125 in the COVID crisis a year ago March, and yet not only managed to make its way back to the normal cyclic high of 85. We've made great progress in the last year, silver versus gold, and it's currently sitting at 67. Where do we go from here? And then I'll get to the prices. I think it's reasonable to assume, given the history of the gold-silver ratio, that we're certainly going to retrace back to 50 or 60 soon, a year or two. And I would not at all be surprised if we retest the 31 low on the ratio. And perhaps even the historic low, which in the last time gold and silver were treated as money and nothing but was really the hyperinflation of the late 70s, culminating in the highs for those two monetary metals in 1980 at about $800 gold and $50 silver. And ignoring the reasons why they went to those numbers, that ratio was 16 to 1. And if you reflect back to for 50 years in the late 1800s, the British pound was the global reserve currency, and it was fixed to gold and silver at a ratio of 16 to 1. I don't know why that number reappears time and time again, but there's two numbers that you can plug into your model for the rest of this bull market on the gold-silver ratio. And if we get to 31, that's silver is going to rise twice as far as gold through the rest of this bull. If we get to 16, it's going to rise 4 times as far. What does that mean for prices? In the 2011 mini bubble, silver got to 49 and gold got to 1910. Gold's breached that high, got to 2100 last year. Silver has not even come close to breaching that high, but it will.
Great insights. So Brad, in the last few minutes, why don't you just tell us and tell investors what can they expect in terms of news flow from Endeavour Silver in the coming weeks and months?
Well, next up is we've got some exploration results from our various projects. We start drilling in January every year, and it takes usually some months to get enough results to start releasing positive results at each of the projects. We've got our Q1 financials coming up in early May. There's a potential for some small acquisitions to continue building our development pipeline as Terra slowly exits the pipeline and becomes a producer. And that will continue all through the year. That combination of exploration results, acquisitions to fill up the development pipeline, and operating and financial performance.
Very good. Well, Brett, I want to thank you very much for giving this update on Endeavour Silver and this overview, and also sharing your insights on the silver market. That was well done. And if any of our viewers would like some further information on Endeavour Silver, or if you have some questions for Brett, please send us an email to info@bloorstreetcapital.com, and we'll make sure they get answered. And if anybody would like some research on Endeavour Silver, please send us an email. And with that, Brett, I want to thank you very much.
Thanks for the opportunity.
Taj, thank you very much for joining us today.
Thank you very much, Jimmy. Thanks for having us.
Taj, before we do a deep dive on Discovery Silver, it's part of the Oxygen Capital group of companies. Why don't you give us a brief overview of Oxygen Capital and just tell us a little bit about them, but also some of their recent successes?
Oxygen Capital is the founder and cornerstone shareholder of Discovery. Currently inside Oxygen, you've got 4 companies. Along with ourselves, you've got Liberty Gold, focused on the Great Basin in the US, Pure Gold, which has just started production at its high-grade underground pure gold mine in Ontario, Canada, and then Northwest Copper, which is currently it's a new merge co between Sun Metals and Serengeti, focused on British Columbia copper gold. So currently 4 companies, we're one of them. But Oxygen has had serial success over the past decade in terms of shareholder returning fantastic gains to shareholders. They've created 9 companies over the past decade. 5 of them have been acquired, so it's crystallized over $3 billion of value for its shareholders. So fantastic track record of success. So ability for us to attract good shareholders, attract capital has been great. The most notable success is Frontier being sold to Newmont in I think 2011, but also True Gold was sold obviously to Endeavour. So they've had quite a few big wins.
Very good. Taj, the Discovery Silver story, it's a new one to me, so I'm looking forward to hearing about this, but it's got an interesting history in how you acquired this asset in 2019. So before we do the actual deep dive on Discovery Silver, why don't you tell us about how you actually acquired this asset?
Okay, perfect. I'll start with maybe a little bit of how Discovery itself started. Discovery, which was previously known as Discovery Metals, started in late 2017, effectively 2018. Had a suite of high-grade underground silver, zinc, lead properties, which all had passed artisanal production. Anecdotally, one of the main properties had over 1 million tons of ore produced sold as direct shipping ore, average grade of about 40% zinc, over 300 gram per ton silver. So very, very high grade, past artisanally mined projects that had never seen modern exploration. So we spent 2018 doing mapping and sampling, geophysics, all of that good stuff, getting it ready for drilling. And then we were cashed up at this point. We'd had about $10-12 million. But it was a tough time in 2018, late 2018 for silver cos out there, and we saw there was a lot of interesting assets out there. Silver was at about $14. There were a lot of assets out there. We had cash, we had a team, we had significant experience in Mexico. So we focused on business development quite a bit, and we looked for a more advanced project to complement our early stage projects. So we looked at, 40, 50 projects. Filtered it down to 5 or 10, did site visits, then filtered it down further. And then Cordero, which was owned at that time by Levon Resources, really stuck out for us. And we did several months of DD on it. We liked it a lot. There was also a past relationship between Mark O'Day, who's the principal of Oxygen, and Levon Resources. And so Levon at that time, again, fell victim to low silver prices. They also didn't really have a succession plan, as their CEO had health problems, and they were looking basically for a partner to help them move the project forward. So it was a good fit. We decided to merge with them. It was 50-50. We had the earlier stage properties. We had the strong team with Mexico experience, cash, the Oxygen name, and the technical backing, and 50-50 merger in the summer of 2019, and the rest is history.
Wow, that's an interesting story. And when you said you looked at 40 to 50 different assets, were they all in Mexico or throughout Latin America?
They were throughout Latin America. Obviously, we were in Mexico. Our team has significant Mexico experience, myself included. I've been working there for over 10 years. So we had a focus on Mexico, but we looked definitely north and south. We looked in the US, we looked in Canada, we looked into South America. But that ties into the fact that I've worked a fair amount of time also in South America, also in Canada, and in other places all over the world. But I really do think Mexico is a top tier mining jurisdiction. I mean, there's in terms of OPEX, CAPEX, etc. We can go on about it, but I really do think it's a premier mining district that gets mining. Mining's in their DNA, and yeah, I mean, geologically, it's the #1 silver producing nation in the world, and probably top 5, top 10 for a bunch of other metals as well. So we just naturally have a nice fit and feel at home in Mexico.
And the weather's significantly better than Canada too.
Yeah, just a little bit better, exactly.
So Taj, what was it exactly about Cordero that appealed to you and your team?
So Cordero was really the legacy perception of it was a big monster project, huge tonnage. That was well known. Lower grade though. Really at this point, kind of late 18, it was really considered a call on silver. You needed $20 silver, at least probably 25 for it to really go, and silver was 14, 15 bucks. But Lavon had done a lot of work on it. It spent over $60 million, lots of drilling. I mean, most of that was all drilling. And in 2011 and 2012, when silver was doing very well, they enjoyed great success. Stock moved up well, market cap was very healthy. But again, silver price came down, and the view of the project was a Penasquito style of project. Big tonnage, low grade, earth moving operation, low strip. And they kept that view on it. For us, we looked at it and we thought a little bit something different. So again, for size, there was no project like it, but we looked at it and is there a project there at $17 or $18 silver? Because in 2009 and 2010, when the original discovery of Cordero happened by Lavon, there was some fantastic high grade hits consistently, very wide widths, essentially starting at surface, right in the main kind of discovery zone, which is known as Poza de Plata. And so we looked at this and we really just said, listen, forget about all the rest of the lower grade stuff, because this deposit is a huge footprint. It's one of the few primary silver open pit projects in the world. Silver is typically underground. So leave all the rest for later, but is there a project there that works at $17 or $18? And then down the road, for leverage and for torque, silver gets to 25 and above, no one's going to touch Cordero as it is. Little did we know we'd be here now. The beauty of the plan was that because of the huge footprint, because it was an open pit, and you could strategically mine good grades and low strip early on, right away, and then the rest of the lower margin stuff would stay intact for when CapEx is paid off or when silver really starts moving. So it was kind of a really good plan. You were protected on the downside, but if silver moved, or if you paid off CapEx, I mean, you'd have a 30-year mine.
Well, your story really speaks to the fact that it makes a big difference when you have the right management team in there, right? Because you had the same asset by 2 different management teams, and you bring in the right group of guys, and it's amazing how much value you can create. And we're going to talk about that because your stock has had a significant move. But what happened with Discovery Silver when you announced this deal with Levin?
Yeah. Listen, they did the work on the discovery. They did a lot of work in progressing it. But what's funny, and it's something that Marco Deo speaks to a lot if he's doing some of his keynote speeches, etc. But it's usually not someone who discovers the deposit who ends up being the operator of the deposit. It's usually the third or fourth one. You can go through so many different projects and assets, and you'll see that a different view on things, and that's how we really wanted to approach this. So when we announced the deal, we had to be a little quiet. I will be honest. Now that it's in the past, we didn't actually want to create. As soon as we announced, until the deal closed, we didn't want to be saying too much because of a potential interloper, in case there were potential interlopers. So we were a little quiet. The deal closed, and then we started marketing, and we talked about this, what I talked about previously, this high grade core, and that it's still a very sizable project, still deeply undervalued. And then the share price started moving materially, and then Eric Sprott obviously came in. You know, he's a very big silver bull. He's been great to have on as support. He came in for 9.9%. Silver started moving. We started putting out spectacular hit after hit, batch after batch, proving our thesis, de-risking the project, and then we've continued our progress since. And we also, at the right times, were able to raise money to really build up an industry-leading balance sheet. And those are all done at substantially higher levels versus the previous financing. Excuse me. So, you know, opportunistically taking money at the right time, executing on a business plan, good silver tailwinds, and great shareholders has been really that's kind of the recipe.
And how, I'm curious how Eric Sprott is as a shareholder. Does he phone you up often?
He's fantastic as a shareholder. He's you know, we have regular updates with him as we would with any other shareholder. You know, his knowledge, it's unbelievable. If you sit with him for about half an hour, his knowledge of just obviously of the commodity side, the junior mining world is unbelievable. But specifically, if he starts talking about gold and silver, it's unbelievable in his macro views on those. So he's been fantastic as a shareholder, and he's been involved in several of the deals of the different board members of Discovery. And so he's built up that comfort, and no, he's been great to have, and as a shareholder, and he also obviously likes to talk about his picks, and a lot of people listen to him because he's had success. So that's obviously helped us as well.
So that's a great overview or the backdrop of Discovery Silver. I want to talk about Cordero specifically now. Before we do that, I want to lay a bit of a foundation. You mentioned this or touched on this earlier, but 9 out of 10 silver mines in the world are underground. And a couple of our previous presenters, Gatos Silver and also Endeavour Silver, they have underground operations in Mexico. Yours is totally different in that it's an open pit. It's going to be very large. And there's one other very well-known open pit mine in Mexico, and this Penasquito, which is owned by Newmont. It's Mexico's largest gold mine, second largest silver mine. I want to talk about the similarities with Penasquito and also with Cordero. But before we do that, why don't you tell us some more about Cordero?
Cordero is like you said, is one of the it is the largest undeveloped primary silver deposit in the world. And when I talk about primary, I talk about the NSR value or the revenues being higher than 50% for silver. So Penasquito is actually a primary gold mine, very good silver credit as well. But as you know, silver comes along for the ride with many other metals, and there's not many that I can actually even think of pure silver mines. Often it almost always comes with gold, but it very often comes with zinc and lead. Cordero is located in Chihuahua State in a major gold silver on a major gold silver belt, and in a fantastic area. We can touch on that later, but it's the size. Cordero's got the fantastic size that you mentioned that you don't usually see in the silver world. The silver world is smaller than the gold world as it is, much smaller in terms of assets and kind of tier one assets, if you will. But we really believe we are showing that Cordero is becoming a tier one asset because of its combination of margin, the size, which I've talked about, and then that scalability, which you can't get with an underground mine. You can't go from 1,000 ton per day to 5,000 ton per day in underground mines. You just can't. Very rare. But you can in an open pit pretty easily. You can go from 10,000 ton per day to 20,000 ton per day pretty easily. in the relative scheme of things. So the ability to really have torque and leverage and that resource expansion is I think one of the very unique things about Cordero. Cordero completely ticks the boxes we think for eventually becoming a mine. And a couple major reasons. Number one is just the structure of it. We own 100% of it. There's no option agreements, earn-ins, JVs. We own it. Secondly is the size of the land package. The resource area, that's really all that's seen. That's only the area of the entire project that's really seen most of the work. Occupies less than 1,000 hectares of the property we have. We have contiguous around it, 35,000 hectares. Fantastic for layout, logistics for an eventual open pit mine. And then also on exploration potential, we've already identified 10, 15 new targets that by geochemistry, geophysics, etc., that look very interesting, but you'd have to think with such a large deposit sitting right in the middle of the property, hopefully there'll be some other potential satellite deposits or related deposits nearby. We've never tested that. So that's going to be something that we're going to be working on over the years, and we think there's high potential for other deposits nearby. So that relates to the exploration potential. And then you talk about infrastructure. There's a power line up one side of the property, and there's a 4 to 6 lane highway up the other side of the property. So layup for logistics, capex for a mine, huge advantages. And then the state we're in Chihuahua State, which is one of the best mining states, consistently ranked as one of the best states for mining in Mexico. Very clear, transparent permitting process. The government is very pro-mining. And so we found it fantastic to work there. And again, we're on a major gold silver belt. We've probably got about 15 or 20 miles within a 200-kilometer radius from us. So, you're in the right area for doing business and also geologically. And then I think that pretty much covers it for kind of Cordero's qualitative factors that really help Cordero for eventually making it a mine.
So you said earlier that Cordero is one of the world's largest undeveloped silver projects, and it's got 600 million ounces of silver, 1 billion ounces of silver equivalent. Just put that into perspective for us. Like, I want the viewers to understand how large this is.
So this basically takes up a footprint of probably the resource area is probably 3.5 kilometers along strike, 2.5 kilometers. I'm talking the big resource, and the numbers you quoted are from the 2018 resource. So it's 3.5 kilometers along strike, 2.5 kilometers wide, already 500-600 meters down to depth. It goes deeper. It's still open below, but if you translate that, again, we are the largest undeveloped primary silver deposit in the world, but think of it in terms of a production scenario. We are targeting probably a production scenario of 15 to 20 million ounces to start and potential to ramp up 15 to 20 million ounces silver equivalent per year. That places us as a top 5 primary silver mine in the world. And as we move toward 25 and 30, you're starting to get into the top 2. And if you get through 30, you're top 1 or 2. So I think that's something that a lot of people don't realize, the size that Cordero could be because of just the inherent endowment it has. Huge size.
Taj, you mentioned that there's already preliminary economic assessment has been done on this in 2018, but you and your team are working on a new one that's going to come out later this year. Why don't you just speak to the differences between the two? What are you hoping to achieve in this updated resource?
Perfect. Yeah, we basically the 2018 resource and PEA, that's what a lot of people think this project, that's the legacy perception of it, the thing I spoke about before. We're completely changing that. And in fact, we probably could have went right to a PFS because of the amount of data we have in terms of both resource and in terms of metallurgy. Like the PEA that's coming out, a lot of the areas in it, a majority probably will be at PFS level. The reason we're putting it out as a PEA, as you mentioned, is because we're rebranding the project. As I said, we've reimagined it, rescoped it. It's a completely different look at the project. So let's start at the resource. The resource previously was a unconstrained assay cutoff kind of model. They did not use geology, lithology, and structure as constraints for the model. So number one, we're using geology and lithology and structure as constraints before we do the resource estimation. That makes a big difference. Number two, there's about 75,000 meters of additional drilling on top of what was in before, which, as I mentioned, we started drilling tighter in these extensions of the discovery zone, and the high grade area, if you will, has expanded substantially. So it's a brand new resource you're dealing with. A lot more de-risked versus before, and just not only because of the methods applied to it, but also just because of the amount of drilling that's been done to it. So the resource is much, much different, and that's what feeds in, obviously, to the PEA. And then let's talk about metallurgy. Quite a bit of met work has been done before, actually, which has showed, very clean, simple sulfide metallurgy. Recovery is kind of in the 90% range for silver and lead, kind of in the kind of low 80s for zinc. We're building on that. They did composites. The previous operator built composites and did met testing based on their mine plan. Our mine plan is, in some parts of it, is triple the grade, the head grade, so sometimes even more than that. So the grade's coming up, and we've got different pit phases, obviously, versus them. So we're going to be testing by pit phase, and then also within each pit phase, testing by the various rock types in that pit phase. So a lot more granularity. So for example, there's 4 different rock types. We'll be testing each of the rock types in each of the pit phases. A lot more detail. And that'll build on what was done previously. I mean, by the time this PEA comes out, this will have 3 significant programs of metallurgy done on it. So that in itself is quite a big de-risking step. So both the resource is much different. I've talked on that. Metallurgy is much different. And then our entire approach to the mining and economics part of it is a lot different. Again, as I spoke about before, it was a bigger is better approach. Huge capex up front, close to 600 million. Huge throughput because the head grade was low. Head grade was kind of about 46 gram per ton silver equivalent. Life of mine. Strip was also low though, so that's good. Close, basically 1-to-1. But you needed a huge mill to make it work at lower silver prices. So, and then if you did have that, it would work, but it was a big capex up front. Our approach is different. Our approach is staged capex, higher grades early in the mine life, kind of a disciplined approach to ramping this up. So our head grades early in the mine life are going to be 3 to 4 times higher than the average head grade before. We will start with initial capex that's, depending on what throughput we pick, we're going to be doing a trade-off study of kind of capex and opex at various throughputs. We're actually that's already underway, but it'll be less than half of what was before. So 300 or so or lower versus the previous operator. And we're really focusing then on that NPV to capex ratio. So those are kind of the key differences versus the PEA, but I just do want to reiterate, we're building a project that we think works at $17, $18 silver, number one, and the rest is upside. Could be very substantial upside, but it is upside. And number two is it's a staged approach and a more disciplined approach. So it's a completely different project versus what we've seen before.
So you mentioned Peñasquito earlier. Let's bring it back to that, and let's just talk about how Cordero compares to Peñasquito in terms of geology.
So in terms of geology, they're actually, when Levant actually made the original discovery, there were a lot of analogies made between the two deposits, high level in terms of geology, in terms of strip ratio. They're located not too far from each other. It's in the state nearby. So a lot of analogies were made to that. And Levant was actually, like I said, they were saying this is the next Peñasquito. Cordero is higher silver, Peñasquito is higher gold. But in terms of, if you look even currently at kind of the head grades we're talking about, the kind of value per ton of ore is very similar between Cordero and Peñasquito in terms of again, NSR value per ton. So yeah, Penasquito is a fantastic operation. They also had a heap leach operation as well as a mill operation. Let's see what happens at Cordero. It's early days compared to that, but Penasquito was a huge winner. I think Goldcorp acquired it, I think, for about 1.6 billion from Glamis, and it's a cornerstone asset for Newmont. So if we could have something like that, that would be fantastic.
Taj, you're sitting on $95 million in cash. Why don't we just talk about that? What are you going to do this year? How much are you going to spend this year in terms of your drilling and also the PEA?
Perfect. The work program we set up for this year was $25 million. I think these are all Canadian. The current cash balance we have as of now is about $95 million. So, you know, roughly, you see our cash balance gets down to about 70 million by the end of the year. Next year, we've got some warrants coming in that are all in the money, which should bring an additional $40 million or so into the bank. So you model this out, going to next year a PFS, next year going to an FS and being in a construction decision. We roughly model that we should have a cash balance of around $70 million or so and be ready for the build, which is a pretty significant portion of the equity capital needed for the build. So it really puts us in a very favorable position. You know, we all of the money we did raise, I will tell you, at much higher levels versus the previous one. And it now really, again, as I said, gives us an industry-leading balance sheet to really push this project forward. This is a big project. In our minds, it's a tier 1 silver asset. It needs a strong balance sheet to support it because it's such a big project in terms of footprint, in terms of amount of drilling, and we really want to de-risk this project very quickly. And so that balance is going to be able to help us do that and take it to a construction decision.
So Taj, in the last few minutes here, why don't we just talk about that, the timeline associated with moving toward that construction decision? What steps do you have to do leading up to that?
It's a pretty simple path actually to execute on, Jimmy. We got to put this, the main catalyst for this year. I'll just go over what's happening this year. We started drilling the project in probably fourth quarter 2019. That has continued. That will end April 30th as our kind of cutoff for phase 1 drilling. That's what will feed the resource that's coming out in the summer, and then a quarter subsequent to that, the PEA. Uninterrupted though, we will continue phase 2 drilling. We've got 4 rigs going. We probably will increase that to at least 5 or 6. The goals of that are to obviously bring any inferred ounces into indicated, so we can use them for the PFS. Also to look for near mine kind of resource expansion. And then also, I didn't touch on it yet, but there are these kind of an earlier stage thing, but the high grade veins that are flanking the open pit area. And I'll talk about that in a sec. But we have also some allocation for the delineation of these high grade veins. So that would then take us to the rest of the year. And then the PFS, say, roughly could come out about the summer of 22. Fall of 22, and then about a year subsequent to that would be the feasibility study. And remember, again, as I noted, this study that's coming out is more akin to a PFS. So our ability to get to a PFS is going to be quicker than most. And we're doing a lot of the things needed for a PFS now. For example, geotech drilling, which would typically be done in PFS, we're doing it now. So that kind of gives you the rough timeline. I did also mention the high grade veins. I will touch on them. Is kind of the further upside to what we spoke of before. So the open pit that I spoke about before is the engine room and will be the focus of the PEA. But in addition to that, in terms of further upside, there's some very high grade veins that flank the open pit. And we actually believe they're the source for the disseminated mineralization of the pit. We've already been drill testing them on pretty wide spacing, just to really be aggressive and see how far they're going. We've got already over 5 kilometers of strike length of these veins. We're down to about 350, 400 meters on them, very continuous. Every time we've stepped out on them, they've hit. There's 3 major vein trends. If, for example, you even take the one vein trend we've drilled the most at the Todos Santos vein trend, it's already about 1.5 kilometers in strike length. It's down to about 400 meters, as I said. You know, drilled with out of the holes we've drilled, the average drilled width is a little bit over 2 meters, and you're talking about grades that are around 600 gram per ton silver equivalent or a little more. So it's 6-7 times the grade of the open pit material. The idea then is you've got your open pit going, and then you can underground mine the veins because they're quite a bit of ways from the open pit area, from the starting open pit area, and you could supplement the open pit feed with, you know, very small tonnage compared to what the open pit is, but very small tonnage of underground kind of feed to really bring up the grades and really juice up the margin in the early years of the mine life. So we think that could be a pretty significant sweetener to the project. Those are going to be drill tested more so this year. We've already definitely kind of defined a nice skeleton, but we'll continue to drill it. And those will probably see their way into the PFS and provide further upside. So I just wanted to touch on the vein part after talking about the timeline.
Taj, you and your team did a great job of creating shareholder wealth here. The stock, Discovery Silver, was up 200% in 2020. It's up another 15% this year. As we wrap up, why don't you just tell our viewers what you and your team are going to do to continue on this path in creating shareholder wealth?
Okay, perfect. We really do believe that the resource and the PA coming out are going to be, you know, going to allow us the ability to talk to these numbers. The Cordero asset, in some people's mind, is still living off the old PEA, as I mentioned, and that will, you know, that will be the case probably until the new study comes out. I think with the new study, people are going to see that this is a world-class asset. Number one. Number two, that it's eventually going to be a mine. It's got all of the qualitative characteristics that need to make it a mine. And I think, as you know, silver developers and producers trade at a pretty significant multiple to their NAV versus, for example, their gold peers. Because of that scarcity multiple silver does get. I really do think, you know, even though despite the run-up, I think, you know, if you did some work on the story, you could see there'd be this significant value still to be realized in the share price. We think we're going to be able to show that and prove that as we've done before, but we really think there's a lot of value still to be realized in the share price, and the PEA is definitely going to allow us to be able to talk about that more concretely.
So in terms of short-term news flow, we have, of course, a lot of drilling results coming out here in the next few months, but also the next big thing would be the PEA, and that's going to come out in what month?
That's coming out in we're hoping early Q4 2021 this year.
Great. Taj, that was a great overview of the Discovery Silver story. Thank you very much for telling it to us. If any of our viewers would like any other questions or have any other questions for Taj or his team, send me an email to info@bloorstreetcapital.com and I'll make sure Taj responds. And with that, Taj, thank you very much.
Thank you very much, Jimmy. Thanks for having us.
Hi, Greg, and thanks for joining us today. It's good to see you again.
Great to be back with you, Jimmy.
Greg, earlier today we spoke with Mike DiRienzo, who's with the Silver Institute, and he was just talking about Mexico and how they're the world's largest silver producer. But Canada also has a very prolific silver region, and that's called the Keno Hill Silver District, which is in the Yukon, and that's where Metallic Minerals is. And before we start talking about metallic, I thought it would be good for you just to give us an overview of Keno Hill and tell us how significant this silver district is in comparison to other ones we might see in other regions in the world.
Yeah, you bet. I mean, Keno Hill is, as you said, it's in Canada. It's in the Yukon Territory. It was discovered back at the turn of the last century, shortly after the Klondike Gold Rush. And historically and today, it's one of the highest grade silver districts in the world, in the upper 2% by grade. It's produced over 220 million ounces of high grade silver since discovery in the 1920s, and currently has a combined all category resource of nearly 100 million ounces at one of the highest grades in the silver industry. And so it's a district that has had a long history of relatively shallow production. And it's a district that holds out the potential based on the style of mineralization, which could be considered very similar to, say, the Coeur d'Alene district in the US, of going to great depth. And it's a 35-kilometer wide district with, we believe, tremendous exploration potential going forward.
And Greg, when you talk about the highest grades in the world, can you just quantify that, please?
Yeah, so historically, the grades at Keno Hill averaged over 1,200 grams per ton silver. Average grade for mine grade, reserve grade, today is around 300 grams per ton, not equivalent, but silver. And the average mine grade for Alexco, our next door neighbor, for their life of mine plan is over 800 grams per ton silver and over 1,200 grams per ton silver equivalent.
And Greg, how would that compare to an underground mine in Mexico?
Well, the average, as I said, is around 300 grams. But let's say a selective underground mining scenario, which would be the most common in most of the deposits in Mexico, they're going to be looking at grades in the 200 to 400, maybe 500 grams per ton would be, typical. So to have a deposit at 800 grams or higher really stands out in terms of those. And I believe as of today, because Alexco has gone back into production in fourth quarter of 2020, I believe that they are the highest grade public company operating mine in the world.
Greg, I'm glad you brought up Alexco because they're also situated in the Keno Hill district, and they are Canada's only pure silver producer. And you have a good understanding of those operations. Why don't you just give us a brief overview of Alexco in terms of production and also grade?
Yeah, so as you pointed out, Jimmy, there's two companies that are focused in the Keno Hill Silver District in terms of silver. Alexco Resources has gone back into production fourth quarter of 2020, and they are right now ramping up on two new declines, the Flame and Moth and the Birmingham. I would argue the Birmingham is probably one of the best undeveloped silver mines in the world. Grade for Birmingham only is over 1,200 grams per ton. The feasibility that Alexco released in 2019 shows that the mine will be producing at an average of over 800 grams per ton grade, again, one of the highest in the world, and producing 4 to 5 million ounces of silver per year, not silver equivalent, but silver. And that makes it in the top 15 silver mines in the world in terms of production, and of course, one of the top in grade. So it really stands out in terms of a high quality primary silver mining jurisdiction and district.
So Greg, that's a good overview of the district and also Alexco. Why don't we jump into metallic minerals now and give us an overview of it?
Absolutely. So Metallic Minerals is a relatively new company. We started to put together Metallic Minerals in 2016, really at kind of the bottom of the bear market. We focused at Keno Hill in part because of that long history we talked about, high-grade production, underexplored, significant part of the district that was controlled by private owners, other public companies. So when we came into the district in 2016, we were able to take advantage of the kind of patchwork land ownership, particularly on the eastern part of the district, consolidating 166 square kilometer land position and really going from 40 different owners, Alexco plus all these either public companies, private companies, or individuals to really the two companies. The exciting part for Metallic Minerals is that the geologic setting that we see on the western part of the district where Alexco is focused continues to the east. We see the same style of high-grade classic Keno structures in the veins and structures, but we also see the potential for bulk tonnage deposits on the east, which have not been previously recognized in the Keno district.
Greg, why don't we talk about your approach and how you're really exploring this area and what things you're doing differently that other people have not done before?
Yeah, I think you raised a really great question. So first of all, Alexco has been in the district for about 10 years. So we really are building on the excellent work that those guys have done to understand the controls to high grade, large deposits in the district. So our targets that we're looking for are a minimum of 50 million ounce deposits, similar to the Birmingham that Alexco has discovered and is now currently developing. We're applying a systematic approach to exploration. We're bringing in the team's experience in similar types of deposits and systems. We're bringing in new technologies and new exploration models and applying them in this part of the district that really has seen relatively limited exploration over the last 50 years because of the patchwork land ownership and up until very recently, the lack of road access. So in applying that systematic approach, we have a two-pronged kind of effort. We are focusing on advanced stage targets that are right on the known main trends. This would be the classic head frame exploration. Best place to find a mine is right next to one. You know, if you can see a head frame in the distance, you know you're in the right neighborhood. And then secondly, going into these parts of the district that we know have the same geologic characteristics and starting to collect for the first time the layers of geology and geochemistry and geophysics, which are so important for modern exploration. And using those tools, we've been successful at developing 12 separate multi-kilometer scale targets that are a combination of geochemical and geophysical signatures. And we're able, for the first time in late 2020, to drill test some of those targets, making several new major discoveries in an area that had not previously seen drilling.
So I just want to frame this for everybody so they have a good understanding of what's going on. But the property that you own, there's really two sections: the western end, which is very close to Alexco, and then the eastern end, which is away from Alexco's mine.
The eastern end, which you could describe, the eastern end, which you could describe as, you know, from the historic Keno Hill mine eastward, is another 15 kilometers, maybe you could say, of similar geology.
So you just touched on your drilling campaign from 2020. It was very successful. Why don't we talk about that?
Yeah, you bet. So two exciting outcomes for us. It was our largest single campaign in the company's relatively short history. It was about 7,000 meters. It was comparable to nearly as large as Alexco's program in 2020 as well. Two focuses on that: higher grade targets on the western part of the district, where we already had drilling, underground sampling, or surface sampling that told us we had ore grade structures. So we were testing those in terms of their potential to extend to depth and laterally. And then secondly, getting the very first reconnaissance drill holes into these multi-kilometer scale targets on the east. We hit on those targets, even though those were first pass drilling reconnaissance. We hit 26 out of 30 holes. We had over 30 separate higher grade intercepts within that, up to 1,000 grams per ton. And we had 6 separate intervals that were from 10 to 40 meters of continuous mineralization, which holds out the potential for larger bulk tonnage type settings on the east that hasn't been previously recognized in the Keno district.
So you recently came out with some drill results earlier this month from the 2020 campaign. Why don't you just touch on those results?
Yeah, so starting with the most recent ones, in April, we announced the drilling from the Formo target. So this is one of our advanced stage targets on the western part of the district. It's right on trend with the Birmingham Hector Calumet system, which is owned by Alexco, as well as on a subsidiary structure called the ELSA trend. And pretty spectacular numbers. In that 12-hole program, we had intercepts from 2 to 6 meters in width and up to 3,500 grams per ton silver. So we were quite pleased to be able to step out with new drilling and test these areas that had historic work and demonstrate that these structures are open, that they're making grade, and they are widths that could be potentially mineable. So our work on that area will have follow-up in 2021. It'll be one of our key target areas in terms of an advanced stage target. The second area that we had results in February was on the Keno East drilling. And this was testing the first of 12 multi-kilometer scale targets on the eastern half of the district. So this year's work will look to offset drill those intercepts in that drilling that we released from 2020, as well as testing the 11 other targets that at this point are untested, and we're hopeful can have similar kinds of outcome as we saw on the first big target we tested there at the Fox area.
Greg, with regard to the press release you released with the drilling results from East Keno, you've said in the past that there are similarities with Penasquito, or you refer to it as Penasquito style mineralization. Can you just expand on that and tell us exactly what you mean?
Yeah, I mean, one of the things we did, Jimmy, coming into this area on the east was to really kind of step back and reinterpret all of the geologic and geophysical data that we had, you know, as kind of the new guys on the block. And one of the exciting outcomes that came from that work was the recognition that when we look at the magnetic map, and magnetics is a tool we use in exploration to be able to map the subsurface geology, because different types of rocks will have different magnetic signatures. And we immediately could see in the map pattern that all of the largest deposits in the Keno district were intimately associated with these intense magnetic low features right along the margin of them. As we went to the eastern part of the district, these magnetic features became larger, and they actually were coincident spatially, one on top of the soil anomalies. And so that started to get our team thinking about other large systems globally where you see this close relationship between these intense magnetic features and deposits. And a good example of that is the Penasquito system in Mexico, which is one of the world's largest silver systems. I think it's #2 silver producer in Mexico, which is, you know, a land of giants for silver. And in situ, I think it's one of the largest resources in the world. It's disseminated, it's mineralization that's both has structural control, and it sits directly above an intrusive system, about a kilometer to depth. And so this intimate relationship between that mineralized intrusive system, which would supply the heat and the metal and the fluids for those deposits, is a setting that we may be seeing similarities to at East Keno. Now, we don't know if we have something as large as that, but the footprint of our soil anomalies is measured in kilometers. And the grades of our soils are anywhere from 10 to 100 grams per ton. The average grade at Penasquito is around 30 grams per ton. So we're certainly in the right ballpark in terms of grade, scale of footprint, and the fact that these intense magnetic features sit directly under these soil anomalies is a good indication that we may be close to the original sources of the Keno deposit in this area, and the potential that not only could we have high-grade Keno-style veins, discrete veins, but that we could have much larger systems of mineralization that could be amenable to bulk mining underground or open pit.
Right. So in the west, it would be underground. In the east, it could be open pit.
Yeah, historically, in the Keno district, maybe small open cuts, but like the mines that Alexco is mining on right now are selective underground mining scenarios. And with what we're seeing on the east, it may be that there's a combination of both bulk tonnage where you could use larger scale and lower cost, as well as those high grade, more selective scenarios.
So that's a good overview of what we saw in 2020. What do you have planned for 2021 in terms of your drilling campaign, and when is it going to begin?
Yeah, so we're excited to be mobilizing earlier. We're going to start mobilizing in May. We should have drills turning by June at Keno Hill. It's going to be a larger program. Last year we had a core drill and a reverse circulation drill. This year we'll start with probably 2 reverse circulation drills and then add a diamond drill. And because last year we didn't get started until August, we've got a much larger season here to be drilling. I would anticipate a minimum of 10,000 meter program and probably larger at Keno Hill, with good news starting to flow from that new work as we start to hit the ground in May and June, and then continue all the way into the fall.
And Greg, before we step away from the drilling campaigns, do you still have more drill results coming out from 2020?
At Keno Hill on our silver projects up in the Yukon, everything that we wanted to get out is out already. on our La Plata project, which is our earlier stage project in the southwestern US. This is a program that is, we're still completing some of the work from last winter. So that's a little bit slower than expected, but we would anticipate having a significant update on La Plata here fairly soon. And we are also looking at a late spring drill program at La Plata now that we've got the permits in hand there as well. So that'll be another nice bit of information that should be supportive for the market.
So Greg, I want to move on now and just talk about your capital structure. If you can just give us some color on that. Also, how much cash you have, and tell us about your shareholder base.
Yeah, it's the company's really in a great position right now. We've got about 125 million shares outstanding. We've been recently trading in the 60 to 70 cent range per share Canadian. That's a market cap of around $85 million. We've got about $8 million cash in the bank. We've got $12 million in the money warrant and no debt. So we're in a great position to undertake our exploration programs, both at our flagship Keno Hill as well as La Plata, with the funding in hand, as well as to give us planning ability into the next year. With the recent financings that were led by Canaccord Genuity, it not only brought new institutional investors, US Global, Crescat, and others, but Eric Sprott has taken 2 major positions. He was the largest participant in the last Canaccord financing, as well as he invested about a year ago in the company. And I think both in terms of Eric's interest as well as the other institutional investors, I think they saw in metallic minerals, one, exposure to this historic Keno Hill camp, these advanced stage target right on the known productive trends, and then these very large scale targets that we're starting to test on the eastern part of the district. So offering both low political risk exposure to the higher grade Keno district with excellent potential to develop rapidly towards resources, and some kind of swing for the fences type targets, out on the east, which, if we're able to successfully start to develop some of those could be real game changers in terms of the way the Keno district is viewed by the marketplace.
Craig, you tell a very compelling story, and I'm just curious what your thoughts are when you look out. What ultimately happens to this district, especially with, if you continue to have success the way you've had, and also with Alexco? Do you see consolidation happening at some point?
No, I think in general, our perspective, and I think many analysts feel the same, is that we are at the very early days of a multi-year commodity bull market cycle, and that we're just getting started. I think we will see consolidation in the silver industry. It's ripe for some of the smaller producers to combine, and I think at some point, the reality is the producers aren't explorers. They don't have a deep portfolio of development projects. They're going to have to go out and acquire high quality development stage assets to be able to build out their production profile. I think a district like Keno Hill stands out in terms of low political risk, excellent potential to become a billion ounce future producer with more exploration. You've already got, it's been de-risked because you have an operating mine there, and you've got so much exploration terrain. So specifically with metallic minerals, we kind of see we are exploration focused. In the mining sector, companies tend to be either, excellent operators, producers, or excellent explorer developers. And we're really in that explorer developer category. That's what our team has proven themselves with a track record of major discoveries around the world. That's what we're focused on. We see a number of opportunities to create value for shareholders through discovery, through advancement and de-risking of resources, similar to our previous company, Nova Gold and others. And I think the opportunity for investors, it could be we find something that is a good fit for our neighbor Alexco. There's an easy opportunity to do an arrangement, joint venture or toll milling with them to provide supplemental ore to the existing mill. Find something bigger, maybe it's a combination of the 2 companies in the district. Find something bigger still, it may well attract one of the bigger silver-focused producer looking for a new flagship operation. And already at that 4 to 5 million ounces a year that Alexco is targeting in the next couple of years, that would be one of the largest producing assets in any of the bigger silver producer portfolios. So add excellent exploration, blue sky, and upside, I think you've really got something quite unique with Keno Hill, with metallic minerals, and with Alexco next door.
And one thing we didn't really discuss or touch on, but the jurisdiction. It's one of the greatest mining jurisdictions in the world.
I think in my experience, the Yukon, it's a territory. That means it's relatively sparsely populated. You know, the mandate for the territorial government is to put in infrastructure and to support economic development. Mining is the #1 economic driver in the Yukon. And, you know, because of that relatively modest population base, it means that they're focused on supporting their industries like mining. And it means that the framework in terms of regulation is well understood. The permitting process is fairly straightforward. Take an example, permits for an exploration stage company like ourselves, you can get them rapidly. They go for 10 years. It really is very straightforward to explore and develop in this jurisdiction. And I think Alexco spent about 2 years in the permit process to bring the new discoveries at Flame and Moth and Birmingham on stream. And, you know, compare that globally, that's very competitive.
Craig, you're a real student of the markets, and I always enjoy hearing your views on gold and silver. What are your thoughts there? Where do you think the gold and silver price are going?
Well, I think that our sense is that we are in a multi-year commodity bull market. Perhaps you could argue a super cycle. You know, if we look back at the last cycle, which was 2001 to 2011, that was driven by industrialization and infrastructure build out for China. And that was built really on the back of the 2008 market crash with the central banks of the world printing dollars. Where are we today? Well, we're facing an environment now where the whole world is stimulating and is looking at infrastructure to take us out of the COVID crisis, not just China. So one could argue that could be even larger. And on top of that, the money printing that's happening, particularly in the US, is, by comparison to 2008, you know, unprecedented. And one could argue that this cycle could be longer and stronger than its previous, you know, analog. You know, we saw this market. I think the first low for silver and gold was back in 2016. I think the second low was, we had two of them. It was middle of 2019 and then again in 2020. And I think we're at the very beginning innings of a major multi-year cycle. Things got a little overheated last September, August. It was understandable that the sector would take a bit of a consolidation. We've now seen prices come back 50% or more on most good quality names. So it's a great opportunity for investors looking at silver in particular to get in on these names at very attractive price levels. And I think the ground has been set here for the next major leg at some point ahead of us, and that this is a buy the dips type of cycle that we're now entering.
So the Yukon Mining Alliance runs a site visit every year in the Yukon. Is that going to happen this year, or is it going to be postponed again?
Well, in 2020, they did it as a virtual event, so it still happened, just not in person. And there is discussions of trying to do it in person this year. I think if the restrictions for travel come off, I think we could well see that event happen. It is an excellent event. It allows people to get up on the ground, to meet the key players in the government, the premier and the mines minister, and to see some of the Yukon communities, as well as get out on some of the most advanced projects in the territory. So it will happen, I'm sure, in one form or another, Jimmy. I don't know if we know yet whether that's going to be an in-person event again or whether we'll do the virtual style. But I think investors who are interested could go to the Yukon Mining Alliance's website. That's the place that you can, you know, indicate interest in participating one way or another. And I think all the companies, the one thing that is great in the Yukon is the companies in the exploration and mining business tend to support each other, and they're all kind of aligned in supporting exploration and development and eventual mine development in the Yukon.
Greg, in the last couple of minutes here, why don't we just touch on, or you can tell investors what to expect in terms of news flow here in the next few weeks or the next couple of months?
You bet. I think 2021 is going to be an exciting year for metallic. I mean, last year in 2020 was our biggest drill campaign to date on Keno Hill. We were excited to employ some new technologies and surveys at La Plata with the first airborne geophysics and ground-based geophysics. We'll have drill programs at Kino Kino in 2021, bigger than last year. We'll have a drill program at La Plata. We're also advancing on our alluvial royalty portfolio. So it's going to be an exciting year. I think you're going to start to see a news flow really kicking off here starting in next month, which is just around the corner. And it'll be a very solid year all the way into the fall again of this year. And my hope is that, you know, with the cycle kind of consolidating as it has since last September, that the time is right for the sector to start to see a bounce, and that, you know, rising metal prices for silver and gold again might be a factor in terms of overall interest in the sector.
Greg, that was a great overview of the Keno Hill Silver District and also of metallic minerals, and I want to thank you very much for taking the time. To all the viewers out there, if you have any questions for Greg or another member of his team, please send us an email to info@bloorstreetcapital.com, and we'll make sure those questions get answered. If you would like some research on metallic minerals, also send us an email and we'll send that along. Greg, once again, thank you.
Thanks for having us, Jimmy. It's been a pleasure.
Maria, thank you very much for joining us. I am looking forward to this discussion.
Thank you for having me.
Maria, before we do a deep dive on the silver sector and silver stocks, why don't we just start with a little bit of background on yourself and on Sprott?
Well, I have been with Sprott Asset Management for a long time, since 2005. In fact, Eric Sprott hired me back in the day to be a base metals analyst. And honestly, I learned everything I know on the job. Eric was very gracious and taught me a lot of things. And it was fun back then. As you can imagine, '05 was the bull market for all kinds of things. So I've been here a while. My focus is on precious metals now, particularly gold and silver. We also have a team based in the United States, and we work together closely with the whole team on a daily basis to manage the mandates that we run. And so my job is mostly talking to companies, speaking with CEOs and their teams and learning about their projects. So I think I have a very fortunate position to have a very fun job where I learn every day and apply what we learn about the markets and silver in particular.
So working with Eric for all those years, you learned from one of the best.
Absolutely. I was also fortunate to learn from John Embry, who was with Sprott at the time, and later on from Charles Oliver, who's also well known as in the money management business in gold in Canada. So yeah, I mean, I've learned from great individuals, and it's been a pleasure and a privilege.
So Maria, given that this is a silver conference, I guess we should jump right into it. I would like to hear your views first on the silver space, and then maybe we can do more of a bottoms-up approach and look at some stocks, or maybe look at your stock selection process.
Okay, perfect. Well, the silver space is a very interesting space to look at. I find not a lot of people study it for any amount of time. I've actually been looking at the space since at least 2012. Now, if you recall, that was the top of the last bull market, 2011 was anyway. So, you know, I've lived through some down times and some hard times, but starting about a couple of years ago, you know, and particularly last year, of course, silver has had a great run. Silver appreciated at 45%. It outperformed gold last year. And we expect silver to continue outperforming gold going forward. And there's a number of reasons for that.
So you raise a good point there, because it wasn't too long ago when silver was essentially an investment, or we bought it for investment purposes or monetary purposes. But now the whole narrative has changed, and it's become more of an industrial product. And with this whole new green theme and electrification, it seems to be becoming a lot more popular. Are you getting a lot more calls from pension funds and endowment funds or family offices asking about silver?
Not really pension funds, no, but we are getting more and more calls, period, about silver. And you brought up a great point, because silver is such a big discussion subject, because it's like gold in the sense that it is an investment vehicle. But on the other side, about half of it does go into industrial uses. And we've been talking more and more about some particular areas of the industrial market and industrial uses of silver that have become quite exciting. And if you don't mind, I can talk a little bit about the areas that we're looking at. And particularly, we just received the 2020 numbers from the Silver Institute and Metals Focus, and the numbers showed that the industrial side of things didn't really fall off the cliff last year as much as people thought it might. And in fact, one area specifically that we talked about, the solar industry or photovoltaics, in fact, was stable and actually grew. It accounts for about 100 million ounces a year. That's about 10% of the market. It's a very big area. And of course, when we talk about silver, we talk about it as being a green metal, because it does go into the green energy uses such as solar. It also is being used more and more in automotive and electric vehicles. And what I've written about and I've talked about is how the infrastructure spending plans, especially in the US by President Biden, have a positive effect on silver in those areas, such as building out more solar capacity, building out electric vehicles, and that has knock-on effect on the whole chain. So I think that whole area has a very bright future for silver. And to me, the data point of last year, where industry was pretty much shut down for a time, and the solar area stood still and even grew a little bit, that was a very positive sign to me.
So so you're very bullish on the sector. Now I'm curious to hear your views. What are you more bullish on, gold or silver?
Well, as I mentioned, we do believe silver will continue outperforming gold. And while we do talk about industrial uses, I do maintain that it is the investment side that will continue driving the price. Last year, we of course saw a big surge in exchange traded funds for physical silver. The number is close to 300 million ounces for last year, which is, again, the market is 1 billion ounces. That means 30% of the market went into ETFs. There was a big uptick in retail selling as well through coins and bars. That area grew last year. And on the OTC market as well, we saw a pickup in activity. And all those trends are continuing into this year, which is obviously supporting the price. So while we do talk about the industrial side, I call it the backbone of the demand side. To me, investment side is what drives the price ultimately. And we are bullish on that side as well, because we continue to see the same trends we saw even prior to last year. And that is, low interest rates, low to negative real interest rates, importantly. We're continuing to see weakness in the US dollar, which has been supportive for silver and gold as well, of course. So yeah, but silver, to come back to the original question of silver over gold, silver has that dual role in industry and investment, and that's what's helping it.
So that's a great overview of the sector. Now I'm kind of curious to hear your views on stock selection. Given that you're a portfolio manager and you run a precious metals fund and a silver fund, maybe we can just touch on that and touch on your due diligence process. How do you determine what stocks you invest in? Are you looking at management teams, jurisdiction, market caps? What's important to you and your team?
Well, I always say investing in mining companies is tricky. You have to look at everything. The bottom line is you cannot just look at one aspect, let's say management team and their track record, and ignore everything else. Of course, geology plays a huge and very, very important role. I'm personally not a geologist. However, I am a finance person. So to me, everything comes back to numbers. So I rely actually on, we have an in-house technical person. I rely on him quite a bit to help me with the earlier stage stuff. But you know, to me, it all comes back. If you're an exploration stage company, I do look heavily at drill results. I do try to visualize things in 3D, but then there's a whole slew of things, as you know. There's infrastructure in place of project. Politics and fiscal regimes play a huge role for us. You know, we are careful in terms of the jurisdictions we invest in. So I've covered infrastructure as well. I mean, metallurgy, right? So going back to geology, that has knock-on effects of how you build, what you build, how big of a plant you build, et cetera, et cetera. So we have to conduct all of that analysis way ahead of time and try to think, what will this look as a mine going, you know, 5-10 years from now? Is it easy to get permits? So there's a whole slew of things that we look at when positioning the portfolio. And what I will say in terms of how we are positioning the portfolios right now is we're going more and more downstream. And by that, I mean, while we're traditionally known to be small to mid cap size managers already, so we generally don't buy large caps, we are going more and more towards exploration and earlier stage companies. And that for me has been very exciting. Last year, we saw a resurgence because of the price of silver going up. I did see a resurgence of small companies coming to market, raising money for exploration and putting that money into the ground and actually drilling their properties and projects. And that's been very interesting to see for me, because we've had a very big lack of new projects, a lack of new mines coming on board. So it's been nice to see that there's money coming back to the sector and putting money into exploration and development.
So that's a lot to unpack, but let me start because you raised a few good points. First of all, what's your minimum market cap that you invest in? You said you tend to go down cap, but what would that be?
Yeah, we don't have a minimum market cap per se. What we do look at is liquidity, trading liquidity. You know, some names are just not investable for us because they, as we say, trade by appointment. So we have to be careful about whether, yes, we can buy a private placement or we can buy a name, but can we also sell it down the road if we need to?
Right. It's all about managing your risk, and if you have to, you want to be able to get out of the name.
Yeah, absolutely.
Now, something else you talked about was how you've been moving down cap in recent years. What would be the breakdown in your portfolio on a weighting basis between producers, developers, and explorcos?
So producers still definitely account for the bulk of the portfolios. So the breakdown would be roughly, depending on the mandate, would be between 20 and 30% exploration at this point in time. And it does become fuzzy because some companies have both development and productions.
Yeah, when you look at those three groups, producers, developers, and explorcos, which group has the best leverage to a move in the silver price? And also, what group do you see the most value in right now?
Ooh, that's a big question. In terms of leverage, I guess there's different kinds of leverage. So if you look at operational leverage, obviously the producers will capture the gains in the metals prices first, right? And that is why we have still the majority of the portfolios in the producers, because we think that they will capitalize on the moves in the metals prices. Now, in terms of stock movements, though, oftentimes exploration companies are the ones that have more leverage in the market to moves in the price, because that gets people excited about the potential of the future of the company. So it's a bit tricky to answer. I think, you know, we look at various metrics, ounces in the ground, cash flow metrics, all price to NAV. So when we position the portfolio, we like to say we invest in companies we like longer term. Okay, so, but definitely I would say exploration companies right now and the smaller companies have more value in them.
And what silver price and what gold price do you use to value companies? So
we don't make price predictions on the metals prices. We generally stick with spot prices or something. You know, when we evaluate a company, we just try to run the universe at a spot price or something close to the spot price.
And how many companies do you follow?
Hundreds.
That's a big job.
Yeah, it is a big job, and that's why we have a team call every day. We discuss a lot of ideas on the call. We follow all the press releases from companies. We discuss the news, what's going on. We speak to a lot of people, and fundamentally, and first and foremost, we speak with as many companies as we can on a daily basis.
And where do you get all your ideas from? From conferences or from brokers or just doing your own research?
All of the above. From speaking with people, of course, but also through, like I said, I follow news releases, right? So if I read the news releases from pretty much most mining companies out there, at least for gold and silver space. Anyway, not the other metals maybe, but we have gotten ideas from just seeing a headline, seeing some drill results that were interesting, and calling up the company and speaking with a company like that.
Maria, you touched on this earlier about valuations and how you value certain companies in certain sectors, but I'm kind of curious, what valuation models do you use for a producer versus an explorco, which might not even have a resource attached to it?
Well, of course, for a producer, your valuation hinges on NAV and cash flow metrics. We like to look at free cash flow. So cash flow or additions to the balance sheet after all spending, not just sustaining spending, but also growth spending. And it'll depend. Obviously, if a company is in a heavy build out stage, that becomes punitive for the company. So we have to adjust for that. But in essence, we do place a lot of emphasis on cash flow and free cash flow. And then for exploration stories, like I said, it's not just looking at even what ounces they have on paper. It is evaluating the quality of those ounces and, importantly, the potential to grow those ounces. So the prospectivity of the deposit getting bigger.
And how do the valuations in this cycle, where we are at this point, compared to what we saw in 2011, 2012?
That's a great question. They're nowhere close to those valuations. Again, we look at price to cash flow. And when we look back to those, to that 10 years ago period, I would say valuations, I don't want to lie, but 50 to 100% higher than now, given where the metals prices are. It's been really interesting to watch the fact that we haven't really re-rated. And that's what makes us think that we're still early days in terms of this run, because, and in fact, we have charts in our marketing materials which show that mining companies, or specifically precious metals mining companies, are trading at half the valuations of the S&P 500, or something like half or less, in fact. So it's, so the money's been going to the general market, and the gold and silver names haven't picked up that momentum yet in terms of valuation.
Well, Maria, that brings us to the end of our time. I want to thank you very much for spending some time with us today and sharing your insights on the silver sector. Before I let you go, I just want to let all the viewers know, if you want a great resource for information on gold and silver, or gold and silver equities, check out the Sprott.com website. It's got a ton of information on there, and also some great interviews with Maria and other members of the Sprott team. And with that, Maria, once again, thank you.
Thank you very much, Jimmy.
Well, that brings us to the end of our silver conference, and I want to thank you for spending time with us today. If you did not have a chance to hear all of the presenters, this conference will be on our YouTube channel, Bloor Street Capital, and all presentations will have chapters on them, so you can run your mouse along the play line and you can see topics of discussion, so that way you can make efficient use of your time. We have some amazing interviews coming up with some of the world's top money managers, and also some great corporate updates. So make sure you hit that subscribe button and the notification button so you can be kept up to date. Once again, I want to thank you for your support.